Beta?
Here we go. Welcome, welcome. What's going on, everybody? Hello.
Hello.
Hey there.
What? I mean, there's a lot going on here.
Oh, yeah. There's a lot going on. We got a lot to talk about. Woo! Welcome, everybody. If you're watching live, thanks for being here. If you're listening or watching after the fact, thank you, too. Also, big what's up to our sponsor, Wide Charts.
Woohoo!
Even sent Nikki this
Thank you, White Charts. I
little
love
cup.
it.
Okay, cool. How's everybody doing out there? Feel free to start throwing in some questions, or you can hold them until we get to Q&A, I guess.
Smash that like button, as
Smash
they say.
the like button.
Yes.
That's what real YouTubers would say. They'd be like, smash the like button. We've got kind of a special occasion today. This is one of our last shows in this studio. Can you believe it? Season 1 in the We Talk Money world is coming to an end, but we've got exciting things planned for the future.
That's right.
Absolutely.
Yeah, and to celebrate not only Trav's recent birthday, but the culmination of season 1, we've got a really fun bottle of whiskey. This is called Jack Daniel's Sinatra Select. It's so fancy that it even came with its own little book.
Ooh.
So, I don't know. I didn't read the book. Did you read the book?
I browsed through it briefly.
Do you remember anything
Yeah.
from when you browsed through
Well,
it?
we did. I guess we did work
You guys
through
did
half
work-
of that bottle the other night.
That's
so,
right. That's right.
Very nice, though. I didn't know if I'd like it because, you know, Jack Daniels is just Jack Daniels, but it's pretty smooth. What do you think?
Yeah, this Sinatra Select stuff is pretty nice, actually. It doesn't taste like your traditional Jack Daniels.
Yeah, it's got a little bit of a smooth flavor.
Yeah, I might have to add some to my coffee, make a little Irish coffee
yeah, I
situation
love
here
that
today.
idea.
Yeah. So, you know, pull up, grab a beer or wine or some liquor, have a little cocktail with us, and we're going to dive right in. I guess this is like a combination of whiskey and wisdom and We Talk Money.
Yeah.
we go.
Oh, yeah. It totally is. Except I have no whiskey. I'm the loser of the group.
Oh, boo.
The
Drinking
responsible one.
Drinking
Yeah.
water.
Got to hydrate. All right, guys. Well, let's go ahead and jump into today's topic, which is what? The markets are melting down because of China. No, really, I mean, they haven't really reacted negatively, but there are some black swans out there that we want to talk about, right?
Yep, definitely some lurking risks out there. And I think there have been a number of questions I've gotten this week, specifically about the China risks. And I think those are more in focus, too, with exactly what's going on with Evergrande and the property sector in China. So definitely top of mind.
Yeah. Cool. So we'll take a look at that. We've also, I hate to admit this, but I'm a little burnt out right now. So over the past couple of weeks, there's just been a lot of whining in crypto Twitter. And like, there have been several days that I'll open Twitter up or whatever, and I'll peruse through and I'll be like, I just don't want to participate in this shit right now. Like, you know, if it's not, you know, people complaining about regulators or a project, you know, going down, or what else recently I logged in. Oh, there was a fake news about Litecoin getting accepted by Walmart, and I log in and everybody's just
yeah.
bitching about it. I'm like, you know, I need a vacation, man. So
I think we all could use a vacation.
yeah, I don't know. You know, the markets are bouncing, which is good. Well, we can talk about the price charts and all that, but yeah, I don't know. I've just been a little, like, I guess, less engaged than I usually am. But there's definitely a lot of stuff to talk about, and don't let my saltiness dissuade anybody from being excited about the markets, because there is so much to be excited about right now.
Yes.
Yeah, the grumpy Gus.
Yeah, I'll be the grumpy ass today, and you guys can be the educated, nice, tactful folks.
Bitcoin doesn't look too bad.
No, not at all.
It
I
doesn't
mean,
look too bad.
look, I'm like I said over the past few weeks, I'm still bullish. I'm still looking for long setups. But one thing I am considering is what Trav is going to give us a masterclass on today, which is why China is going to ruin everybody's dinner. They're going to be like that drunk uncle at the dinner table, making everybody, you know, embarrassed to be there.
They have been like doing some stuff lately. They've been in the news a lot.
Yes. Oh my God, from disappearing billionaires to cracking down on different industries.
It's
to
not a good look for China right now.
Not at all. Nope. All right. Well, why don't we just jump into that then? Because, you know, that's kind of the big story is What is this? Evergrande? How do you say that, Trev?
I say it Evergrande, but I could be wrong on that. Evergrande is how I say it. I don't know how everyone else says it.
Cool. Okay. So the headliner news today is China tells banks that Evergrande won't pay interest next week. What is going on over here?
Yeah. So Evergrande is one of the largest property development companies in China. In fact, for a long while, it was the top property developer in China by total assets. And I think it's still top 3 even now, with it reducing its, its balance sheet, or trying to reduce its balance sheet over the past 2 years. This thing is like, this has been a crisis in slow motion, because this thing has been going on for the past 2 years, and it's now finally coming to a critical point where it looks like the Chinese government is going to have to step in and take over Evergrande and either initiate like some sort of bailout or forced takeover or restructuring. And within that, there's obviously going to be winners and losers. And there are a lot of people that are worried because the Chinese property sector is so significant as a driver of their GDP. I mean, there are estimates from Fitch and other ratings agencies that the Chinese property sector accounts for anywhere between 15 and 25% of their GDP. It's a really big deal, right? China does a lot of its economic development through the property sector. Yeah. And Evergrande is one of the top 3 property developers in China.
And that's where my understanding is a lot of Chinese citizens actually save their nest egg in real estate, not so much the stock market, right?
That's right. Yeah. The property market, even more so than the U.S., is a significant source of Chinese household wealth. So very, very important. And the Chinese government for the past 2 years has been trying to curb the excessive leverage levels among the property developers. I mean, the property developers in China got drunk on massive amounts of development and debt-fueled development over the past decade or two. And around about 2 years ago, the Chinese government finally said, we need to put some caps on the amount of not only leverage that these developers can take on, but also the total amount of like land buys that they can make in any given period. So the Chinese government has slowly been trying to pump the brakes and make sure that the Chinese property sector doesn't become too big to fail or a systemic risk to the financial system. Yeah. So that, I think, was all in good intentions. The problem now, though, is that in response, companies like Evergrande have been trying to deleverage, trying to slow down the property sector development. And the problem there, of course, is that starts to create a situation where it's like this feedback loop. Lower real estate prices, less development leads to people starting to become worried about the sector. Evergrande's bonds have been selling off for the past year or so, and now they're at a point where they have no ability to get short-term financing to replace their maturing debt. Their bonds trade at 20 or 30 cents on the dollar.
Is that what this chart is? I think we've got a chart of a bunch of, these are different Chinese developer bonds.
Yes.
So what's been happening here since, I guess, like early summer?
Yeah, and this is kind of the contagion risk, because these are actually bond prices for a number of different developers, property developers in China, not just Evergrande. You can see Evergrande there is, again, trading, I think most recently around 20 to 25 cents on the dollar. They're dollar-based bonds. Yeah. But these other lines are other Chinese property developers. So the concern is the Chinese property sector, one of the things Evergrande has been trying to do is they've been trying to sell as many projects as they can to delever the balance sheet. And in doing so, they're offering all these discounts. And so the prices of property have been coming down. Yeah. Which you would think would be a good thing, and it is for consumers. But for the property sector as a whole, it's kind of like what we saw in 2008 in the U.S., right? If you have the housing market, which was previously very hot, start to cool down, well, there's a lot of leverage there. Consumers have leverage, developers have leverage, and all of a sudden when the assumptions that prices are going to continue to go up stops happening, then the opposite happens. Everybody flees. Everybody who took on too much leverage to buy land or properties starts to get margin called, and then it becomes this self-fulfilling down cycle and a deleveraging cycle. So that's what we're seeing. And the concern is not only is the Evergrande potential bankruptcy going to lead to, depressed prices in the property market, but it's going to expand to other developers, other housing, developers in China may fail. And then what does that mean for the banks that are holding all of this debt? Yeah. Because again, property development companies are levered, like in some cases, 5 to 10x leverage on their annual profit. Very, very leveraged. So that can create a situation where, like Evergrande, where they may not be able to pay their debts. And that means these leveraged banks in China could also take significant losses.
So what does that mean for the person that's outside of China, the investor that's going, okay, that's great, sucks for them, but how does that affect me? How does that affect potential U.S. markets or crypto prices or anything like that? What's the fallout that could happen from this?
A lot of potential ripple effects depending on how the situation is handled. If you remember back to 2008 with like Lehman Brothers and Bear Stearns and what happened when the U.S. government finally stepped back and said, we're going to let them fail and let Lehman Brothers fail over like a 2 or 3 day period, then it became an oh shit moment for the rest of the financial sector globally, because a lot of banks hold assets with Lehman. They have derivatives contracts with Lehman. They have direct exposure via all sorts of different investment vehicles to Lehman's debt and equity, right? And so when the U.S. government stepped back and said, we're going to let Lehman fail, we got to let some of these firms fail, all of a sudden, all of these other financial institutions globally said, shit, we might have exposure here. It might be significant. We might need to raise capital. We might be in trouble. And it just became this contagion effect.
Yeah.
So that's the worry for some people here is there are holders of Evergrande's debt outside of China. There are also holders of Evergrande's debt inside China, aka the Chinese banks.
Yeah.
And although Evergrande is not as leveraged as, say, a Lehman Brothers and not quite as globally important as some of the big banks from the financial crisis, there is a concern that enough losses on the debt could lead to a situation where you have a rolling like write down of assets globally among different financial institutions. And the banks particularly, which are very leveraged, there's only a certain capital cushion that they've got to absorb losses. And let me just step back and say, I don't personally believe we're looking at a Lehman situation here, because I think what will happen is the Chinese government has a lot more centralized control to go in and manage what's happening in their economy, manage what's happening with banks, force banks to do certain actions, force property developers to do certain things, force losses on private creditors. And they have the potential to not do what the U.S. did, where they just let Lehman fall into free fall, right? They have the potential to manage this situation a little bit more in an orderly fashion.
It'll be an interesting experiment for sure.
Yeah.
Got a couple comments that I was looking at here in chat. Mark was saying empty cities and you never own it. It's always owned by the party. That's what I understand is like citizens can't actually own land. You can just own the property, right? That's why there's a lot of these like massive condo buildings. Somebody correct me if I'm wrong, but I think that's the case, which is really interesting. And now you see like, I've seen videos of them just bulldozing entire ghost cities, because they build so quickly and so cheaply that they can throw these cities up, but there's nobody to fill them. And apparently the demand for Shanghai and Beijing is still super high. So those prices are maybe insulated, because it's like the average price for a 2-bedroom condo in Shanghai is well over $1 million US. And in these outer cities, I guess they're just collapsing, right? So does that contagion like continue and get really, really bad, or does it stay localized? I don't know. I guess that's the $1 trillion question.
That is the real key here. You've nailed it, because as you can see here right now, it looks like the market is saying this could affect the entire property sector and potentially even, more broadly. Some of the Chinese bank stocks look a little weak over the past couple of months. It could also affect, consumer demand. A lot of these projects that Evergrande is attempting to build, they took a bunch of deposits from consumers. And a lot of consumers actually showed up to the Evergrande headquarters this week to protest and be like, where's our money?
Yeah. Didn't they stop paying employees?
Yeah, there's, I'm not 100% clear on that. They have stopped like payments to suppliers in certain situations and things like that.
Oh, okay.
Yeah, so.
Yeah, I did see a protest. I wasn't sure if it was employees or consumers or suppliers or.
Yeah, and so this could have a chilling effect on demand. And I'm glad you brought this up. This was what I was going to be was something I was going to talk about next, which is we're already seeing a Chinese economy that looks pretty weak from a consumer confidence perspective. Retail sales for China in this most recent reading came in much weaker than expected. And there's also industrial production and other manufacturing sector reports that have come out this week that paint a picture of a pretty weak Chinese economy. So this is all sort of happening at a bad time.
Yeah. And I know a lot of people over the past few weeks and months have been bringing up and asking you guys like, hey, Chinese stocks are pretty cheap right now. What do you guys think? And I know, you guys have done a great job at pointing out a lot of the risks that are specific to Chinese stocks.
Yeah.
So this only adds fuel to that fire.
Yeah. Yeah. And so ultimately, if I had to summarize the situation, I think what is going to be important to watch over the next few weeks and maybe even a couple months here as we finish up the year is how does the CCP handle the Evergrande situation? Can they keep it relatively contained? Because if they allow it to spread to the sector as a whole, they allow it to become a more of a broad contagion effect, then we could very well see it hit markets like stocks in the US, crypto globally. Like it can definitely reach those markets when you have worries about the banking sector, worries about investment firms that could fail, property sector, weak economies. I mean, China's the second or third largest economy in the world.
Yeah, a lot of companies rely on the Chinese economy.
Yeah.
US traded companies.
Yeah, the US and China are like this, like
Yeah.
and to the person that's thinking like, well, how does this affect Bitcoin, or why would it affect crypto prices? Like fundamentally, probably not, but behaviorally, absolutely. Like, because when markets panic, when stock markets panic or people get fearful, they start to liquidate assets because they think they're going to need liquid cash to survive, right? So some portion of Bitcoin holders, in the event of a contagion effect where this causes a collapse, would be like, oh yeah, I need to liquidate so I can eat, right? So that could be bearish pressure in the short term. Over the long run, I would guess it's not going to affect Bitcoin that much because fundamentally it's not correlated to equities. It's a hard, it's.
I think you nailed that.
Yeah. So,
Evergrande on its own is not enough to sink the financial system. It's not enough to sink the Chinese banks even. I mean, the Chinese banks have, several trillion of assets, I think $1 trillion of equity or so. And so even if, the bonds, of which I think there's like 100 billion of outstanding bonds for Evergrande, they do have other liabilities, supplier liabilities and stuff like that adds up to like 200 or 300 billion. But even if you were to assume, 20 or 30 cents on the dollar recoveries of that, you're looking at maybe losses total for the entire system of bondholders and debt holders of maybe, I don't know, 50 to 150 billion, which is something that could be absorbed by the Chinese banking sector and bondholders as a whole without an entire blow up of the financial system globally. But that's Evergrande alone.
Yeah.
If it also means that all the other massive Chinese property developers go down in flames, then we have a real issue.
So would you say it's something to kind of keep your eye on, maybe not freak out yet, but think about the bear case of what this could turn into?
Yeah, and I think we're going to see Evergrande probably file for some sort of restructuring in the next week or two. And so there will be some negative headlines here in the near term. And I don't know exactly how investors are going to react to that.
Yeah.
But the CCP their response will be the thing to watch here and how quickly they move to handle this. And
Gotcha.
we have, this has been on their radar for a number of months. So, hopefully they have a plan. I guess we'll find out. But China in general has become uninvestable for U.S. investors and European investors at this point.
Yeah.
We have a whole nother thing happening this week with the casinos.
Oh, yeah.
Yeah, what is this? So
Check out with the wind chart.
Here we go. Macau's future in doubt as crackdown spurs global casino sell-off. What happened here, guys?
Well, Wynn and Las Vegas Sands both get more than 50% of their revenue from Macau, their casinos in Macau. And so the threat here is that their licenses on the casinos that they jointly own will not be renewed, and therefore like all that revenue and profit potentially goes poof.
Yeah.
That's the biggest downside. However, probably more likely what will happen is the Chinese government will put in some restrictions, the amount of, wagers that could be made, the amount of taxes these casinos pay probably go up. Like the economics at a minimum get worse for these casinos.
Yeah.
And at worst, I guess you could see a situation where like the holders, these US based companies that hold interest in these Macau casinos could get wiped out.
Yeah.
So again, you have another sector we talked about over the past couple weeks, the education sector in China, we talked about the tech sector, we talked about
they made gaming basically illegal for people under the age of 18, like effectively so. Like, is there anything they won't do at this point? Like, I saw they're even making threats about going to war over, certain countries identifying with Taiwan as their own like sovereign nation. They're just becoming like the assholes of the world. I hate to say it like that, but my God, man, like. I thought the U.S. was heavy-handed. These guys are, going into every little sector and just stirring the pot.
They're not
pissing everybody off.
Yeah. They're on the front end of their, their new 5-year plan, and so they're taking a lot of actions to essentially align, their policies and their ideals with what they want to get achieved over the next 5 years, and it's very heavy-handed, and it's taken a lot of people by surprise.
Yeah.
And it's made it very, very difficult to consider any kind of investments in China. And there's all sorts of other issues we've talked about, like the VIE structure. You can't even legally own equity in companies in China. You got to own it through a Cayman subsidiary. And there's a question about whether or not you have any legal recourse. And so it's a
hairy situation.
It's a mess.
I got a comment in here from Holden. He says there's rumors are that the commercial paper that's backing Tether is mainly Evergrande. They're both based in Hong Kong. I can't speak to that rumor. I don't know, but that would be kind of crazy. That's also maybe another black swan potentially for Bitcoin. I don't know.
Yes, I have heard that rumor for months as well. And I don't know if there's any truth to it or not.
Yeah.
But, Tether's banking relationships, I know some of them run through, the Caribbean, and then the question is, well, who funds it on the the back end from there, because there could be tons of backers in all sorts of places geographically that fund through a Cayman or a Bermuda subsidiary, but the actual real funding is coming from Hong Kong or Russia or somewhere else we don't know.
Yeah, we'll find out. He was also saying he was going to say 165 billion is tiny compared to the trillions of magic dollars the U.S. is printing. I mean, that's true. Like, 150 or 200 billion dollars, like that is not an insignificant amount of money, but hopefully that's not enough that would, put us in another '08 financial crisis type situation, unless it led to that reflexive effect where that problem created new problems. And next thing you know, it's not 150 billion, it's 2 trillion or more, right? Like that's the bear case there, I guess.
That's right. That's it.
Interesting. All right. Well, let's keep moving. I'm kind of bored with China.
I mean, I imagine that was very insightful. Thank you.
Oh, yeah. Thank you, Travis, for that.
Thank you, Travis.
Always a pleasure. What else we got going on? So, I don't know. Should we talk about something fun? That was kind of heavy.
Okay.
Well, we should finish with this heavy stuff, because I do want to say real quickly, like, I do want to point out, this sort of ties in with this a little bit in the sense that we're calling out the risks here to the overall market, I think, in the near term.
Let's fearmonger.
Okay.
Yeah.
Oh.
That gets views. Yeah. Be scared.
And this is something that has been quietly bubbling beneath the surface.
Yes.
So save it till the end?
No, I'm
do
saying
it
I think
now?
if we're going to talk about some of the risks to the crypto and stock market.
Yeah, we'll get through that. Okay, let's go.
We'll get through the heavy, and then we'll end with the light.
Yeah, this is another thing I'm sick of seeing in the news. It's like every once in a while this pops up, and I'm like, I wonder what they're going to do. Why the U.S. is having yet another debt ceiling debate. Travis, tell us why.
Spend all the money.
Yes.
The stupidest, most political and unnecessary game ever played, probably, or at least, one of the stupidest that I see played every few years, is this debt ceiling issue, right?
Yeah.
So it's a technical thing where Congress has to increase the amount of debt that the U.S. can take on. The problem is Congress has already authorized spending in their other bills, right? And this includes the Republicans and Trump when they were in charge of, Congress and the presidency in the last session, right? And so a lot of the U.S. debt that's been built up over these past, couple of years is under Republican administration, right?
Yeah.
And certainly the Democrats are also contributing to that now that they are in power. But the point being, both Republicans and Democrats have continually spent more money than the Treasury takes in tax revenues, right? We run government deficits.
Yes.
Massive ones, right? It's been true under Republicans.
Massive.
It's been true under Democrats. And so this debt ceiling is sort of this artificial limit. The Congress approves all these spending packages, and then it's sort of like this secondary thing that they have to approve, which is, oh yeah, we approved all the spending. Now we gotta also make sure that we have our debt ceiling high enough so that we can actually go out and spend those dollars that we've already approved spending for, right? And so the debt ceiling is like this silly thing, this silly political game that Republicans play to try to score points against Democrats when they're in office, where they say, oh, no, we've been spending too much. We can't raise the debt ceiling. We're not going to raise the debt ceiling, even though we already authorized the spending bills beforehand.
Yeah.
But we can't raise our debt ceiling because we're spending too much money.
It's like if you have a credit card limit, but you are your own lender.
Yes.
It's like, I impose this limit on myself, but I already signed a contract to go buy that car I can't afford. Okay, I'll just increase my limit.
That is a perfect analogy. Yeah. It's like you
Brilliant.
already signed the document to spend money on this car. And
Like you
now-
weren't thinking about that before
Yeah.
you signed the document?
Yeah. And so this is just so silly because what unfortunately happens here is, U.S. government debt could actually get downgraded by the rating agencies. There is a potential risk out there that if the debt ceiling were not raised, that the U.S. could have a technical default on its debt, which would be a completely self-imposed default.
Yeah.
It is not because we can't print money or, pay the interest on our debt or pay the principal on our debt. It's just self-imposed where they say we can't have any more debt. We're not going to pay our debt. Like, why would we do that?
Right.
Why would the U.S. government shoot itself in the foot by defaulting on its own debt when it doesn't need to, right? And so it just really is frustrating because when they get closer to the deadline, which is thought to be in October when, we hit this debt ceiling, it could create some chaos for markets if the U.S. government has a technical default on its debt. I mean, it's insane,
Yeah. Oh, ridiculous. Okay.
Politics.
So what do we make of that? Any final comments on what investors could think of, if anything, or?
The stock markets, after seeing this played out in the last several Democratic terms under Obama, like this, we had this debt ceiling fight several times before. I think the stock market is kind of seeing it as, well, this is just political theater and it'll all get worked out probably right at the deadline or right after the deadline.
Yeah.
So the markets are kind of shaking it off, but there's a small probability out there that this time it could be a little different, and there's so much political infighting that they literally have a technical default on the debt, which I don't know the full repercussions of that, to be honest. I think markets would probably shit the bed for a couple days.
Yeah.
And
I mean, it's just like China's not going to let this real estate problem get out of hand. Like, we're not going to do that, I don't think, right?
I would think that, politicians right now have a lot on the line.
Yes.
And, they're trying to get a lot of things done, and they're trying to get reelected. And I would think that they have that in mind and they're going to figure this out.
Yeah.
But
all right. Look, moving on. We got another heavy thing. What is your raise really worth? Inflation has something to say about it. So basically, I always say real wages. Real wages, which are actually turning into real rages lately. They're actually negative. So even though they're going up because inflation's going up faster, people are making less money. So, I don't know. What do we think about this?
This is so frustrating, right?
Yeah, it is. It actually is, because we thought we were doing good. Wages have been stagnant for a very long time. And COVID kind of brought this wage increase opportunity, savings increase opportunity, all of these, the consumer actually was starting to maybe get ahead.
Yeah.
Debts were going down, consumer debt was declining. And then inflation comes in and it's sorry.
Yeah.
And I imagine the inflation is transitory argument. Obviously we don't know how long this inflation is going to stick around. What we do know is that higher wages once they get increased, they usually stick.
Yeah.
You know, and so there's hope there that maybe inflation kind of is transitory and we see things come back down. And I don't know. We'll see. But
I guess this is kind of good news, though, right? Like hourly earnings for leisure and hospitality have gone up compared to other private sectors. So I don't know. What do we make of this?
No,
Is this just because of the bounce back, or is it like they're actually really making a difference?
I think that they're like in the hospitality.
Yeah. This is like what I mean by making a difference is like, is this meaningful wage growth? Is this servers and drivers and people in hospitality and travel industry, are they actually getting a better shake? Because they've been screwed for so long.
I mean, it appears that they are. We're looking at it right there, right?
Yeah.
And also anecdotally, we've seen Chick-fil-A is hiring at $16 an hour. You know, like fast food joints are hiring at very high hourly rates that I've never seen in my lifetime, you know. So we know that we know there's a labor shortage. We know that the unemployment benefits kind of messed with that cohort of employees.
Yeah.
The service industry, a lot of them were making more on unemployment, and it was hard for them. It was hard for businesses to find labor. So now businesses are having to cough up the bucks.
Yeah.
And
good. They should get paid more for dealing with all the Karens throughout the pandemic. My God, how many videos have we seen of people just treating service workers like they're nothing? Like, it makes me so angry.
It appears that if that sticks, if those wages stick for the leisure and hospitality area, that's going to be a win-win for them.
Yeah.
We'll see.
Good.
Yeah.
Look, man, I need more whiskey. That was a heavy segment.
You're having a hard time.
For anybody that came in a little bit late, we've got the Jack Daniel's Sinatra Select. I guess it was out of production a couple years, but we've got it. How you doing over there, Charles?
Hey, I'm good. I need to.
Oh yeah, you got to play catch up.
You know, do you guys feel like just finance and investing in general is usually bad news over good news?
Well, I think it's a lot of like looking at all the bad and like trying to quantify risk, right? It's not like we enjoy talking about this shit. It's like we have to, and we have to look at it and decide, okay, what's noise and what can we ignore, and what's signal, what could affect our investments, right?
Yeah.
What do you guys think?
Yeah, I think that's a great way to look at it. I love that chart that we sometimes show, that like it's like the chart of the S&P with all of the things,
the catastrophic events.
Yeah, all
Oh, yeah.
the things that happen that people worry about every year, you know, pandemics,
And then it continues to go up.
You know, oil shocks, or, you know, political things, debt ceiling, whatever, you know. And yet over time you still have like rising asset prices. Now, I'm not saying that happens forever, it happens every year, but we do seem to climb the wall of worry a lot in investing, both in stocks and crypto, and heck, even bonds and real estate too.
Yeah.
Now, we have been living in a period where interest rates have broadly been going lower over time, in a period over the last 2 or 3 decades where we've had pretty modest to low inflation in a lot of developed economies. So the real question is, structurally, does that change going forward, and are we entering a new era, in which case we won't see asset prices rise the same way they have in the past?
That's the big question. That's the big question, right?
Yeah.
Like a lot of people are expecting muted equity returns,
Yeah.
you know, for the future.
The reality, though, is there's no shortage of capital looking for yield, right? Like that's what I think about. And like when people are waking up to the idea that like bonds suck, equities are expensive,
Yeah.
money is being printed out of thin air, like that's why I'm just consistently bullish on Bitcoin. Like I hate to be a perma bull in anything, and I know there's market cycles, but as the quote says, and yet Bitcoin lives on. You know,
You're going to find a way to say that in every show, aren't you?
if I ever do lose one of those Bitcoin bets with a tattoo, that'll probably be the quote. And yet Bitcoin lives on. And then something's going to happen, and I don't know. And then I'll have to cross that out and say, and Safe Moon lives on, or
Oh, sheesh moon.
Sheesh Moon.
Well, actually, something you said just kind caught my attention there too, which is you said, we try to take advantage of the market cycles. That's another reason why we're doing this day to day and week to week, is because we're trying to make money within the market cycles that sometimes give us opportunity within the broader trend.
Yeah.
For a lot of people, the broader trend is just, hold assets for a few decades, and generally, you should beat inflation, hopefully, if you're in the right asset classes. But for us, it's like, yeah, we have our longer term exposure, but we also want to make money within the shorter term cycles.
Yeah. And so I tweeted this today, and to your point, Trav, like, I was thinking about this because I was split. I said, I look at this as my most expensive trading mistake, and I said I've left millions of dollars on the table by underestimating how high some crypto prices could go. For example, I felt like a genius when I traded Ethereum from $1.50 to 15, and I was like, great, we made a shit ton of money, awesome. But then I like prices went up again, and I was like, wow. I felt like a genius again, trading from 400 to 1200, and then most recently from 350 to over $4,000. And I was thinking, I'm like, where I've left a lot of money on the table is by assuming that a crazy high price today is unsustainable. But what has happened, and this doesn't have to continue, but what has happened is like these prior market cycles are just blips on the radar compared to current and potentially future market cycles, right? So I said, like, obviously risk management comes first, but never underestimate what crypto can do. So on one hand, I'm like, man, I just want to stack as many sats as I can and just hodl, right? Like half of my brain thinks that, but then the other half thinks about the 70, 80+% drawdowns that we experience and how incredibly difficult it is to not take profit and hold your entire portfolio with that deep of drawdown, right? And then get the opportunity to trade those cycles, which is what you guys do in stocks, which is what we do in crypto, with real estate, with everything. I guess that's the game.
It's funny because when you said all of this, I was like, this translates to the stock market completely.
Yeah.
Like when you think about the 2008 financial crisis, when you think about the 2020 market panic, it's like, back then we thought the markets were probably overvalued from one time to another, and we were like, there's no way this market just keeps going up. Like we need to see a correction, and it just keeps going up. And then 08 and 2020 looks like a blip on the map, a blip on the chart. And so I mean, this whole way of thinking probably translates to a few other assets.
That's a great point. Yeah, and to Trav's point about that chart where it shows all the reasons why the stock market was going to die over the last 20 years, right? This is it. And you got Perma bear like newsletter guys like Harry Dent that are just forever bearish and forever lose everybody's money, and the Peter Schiffs of the world that fail to see technical developments and why, like, you got the narrative right, but you got the asset wrong, right?
When it comes to assets, being a perma bear, like, I don't see how people can still be perma bears after decades and decades. And with Bitcoin, obviously that hasn't been around as long, but even Bitcoin, like, perma bears are just getting steamrolled.
And
they're not like,
the higher the price goes, the more some of these guys dig their heels in. And they just stick to the narrative in the face of them just being dead fucking wrong.
And then when a regular correction comes, like a normal correction comes, they're like, "See, we told you." And
we told you it was done.
And then it just goes right back up. It's just, I don't know. I think being a perma anything is not necessarily healthy.
Yeah.
But being a perma bear seems to be the most damaging thing to be when it comes to investing in asset classes over the long haul.
If you think about it, if you're a perma bear, you are going against a tide of a tremendous amount of capital and buying pressure. Like it's like a stampede. Imagine if you're like standing in a valley and a stampede's coming at you. That's capital looking to get invested, right? Now that stampede can disappear during times of fear, but people are always looking for yield. They're always looking to grow their wealth. So, You can either be a salty person and sit on the sidelines and say the Fed is evil, I'm not investing in the stock market, or crypto is too risky, I'm not going to buy Bitcoin, or whatever. You can sit with your hands like this and you can believe your narrative, but you're not going to build wealth that way. There was a couple comments and questions I wanted to pull up too. Holden said, to the point about like letting certain things in the crypto markets ride and you never know how far crypto prices will go. He goes, true, but there are thousands of more coins that have done big gains and they've crashed and never come back. That's a really great point. And I want to point that out because survivorship bias is easy to fall into that trap. Like if you're coming into the crypto markets or the stock market for the first time in 2021 and you weren't there since the early days, you don't know the coins or the projects that came along that made big boom and bust patterns and never came back and died. And if you did just hodl those, you would have lost significant portions of your capital. So you do want to keep that in mind. That's why I always say, like, I actively strategically trade to accumulate more Bitcoin and accumulate more fiat, and at some level accumulate things like ETH and a few other coins as well. But trading cycles is great, man, because you can take hard profits out.
I mean, to his point, there's always going to be, I mean, even in the stock market, there's penny stocks or there's stocks that boom and bust all the time. There's always going to be those bad apples, in the asset, in the general asset class. And it's just like in crypto, you have to know what you're buying, right? You have to do a little bit of research and decide if something's worth your capital or not. But not everything survives in crypto. Not every company survives in stocks. I mean, that's always going to be the case. But as a broad asset class, there's usually long-term outlooks are usually good.
Yeah, look, equity in profitable companies is not going away. Owning profitable companies is not going away. Hard money assets like gold and Bitcoin, I don't think they're going to go away. I don't know.
Bitcoin, TBD.
Yeah, well, money is a social construct, right? It is whatever we want. Whatever we say it is. Like, hey, whiskey is this is the real asset. It's good forever. It's, delicious. It takes the burden off of all this heavy news.
Oh, man.
Yeah, I don't know. Okay, cool. What else are we going to talk about? Nikki, let's shill your YouTube channel.
Oh, shill it.
Because I love the video you just put out. Mean comments. Financial planner reacts to mean comments. I thought this was so cool. And I know you're just really getting your channel started here.
Call those haters out.
Yeah. What was kind of the main theme? There's always like the 13-year-olds in his mom's basement that are saying stupid shit. But what is the most common, I guess, hate or like thing that you get that you can respond to?
Well, a lot of people hate the stock market. And like, even though I outline the data exactly how it is, they'll still tell me that the stock market doesn't return this amount or that amount, or the stock market's dumb or whatever. People definitely are not, a lot of people say things about like my voice. Like well,
you are like a 5-foot little Italian
voice, girl. But really the main thing is people kind of shit on financial planners or financial professionals.
Oh yeah.
Financial advisors, investment advisors, whatever word you want to use, right? And one of the comments that I replied to, he was basically, I think it was he was saying that financial planners are the reason Americans are broke, financial planners are terrible, they, don't know what they're doing, all of these other mean things, and that I shouldn't make videos anymore. So I was like, you know what? I can make an educational experience out of this. And that's what I did. And I outlined, the differences between the different financial professionals out there, because these terms get thrown around and they get interchanged a lot, and they're not the same thing necessarily.
Yeah.
So like you have the term investment advisor, you have the term financial planner, and you have insurance salespeople, which call themselves investment advisors, but they're not.
They're like the used car salespeople of the financial industry.
I don't want to crap on insurance people that sell insurance, because some people need insurance and they need a good insurance agent to sell them insurance.
I feel like maybe let me rephrase that. Yeah. They're the ones that get the most hate because there are outlier really bad salespeople in that space that we've run into that are trying to sell people on these insurance policies where they're selling them as investment ideas, but they're not covering the risks. They're not covering opportunity costs.
They sell them as retirement plans, and they say, you don't need a 401k. You don't need a brokerage account. You just need this IUL policy, you know, which is an index universal life policy. Very expensive policy that people don't realize they're getting shammed into. So basically, the point is, when you hear these terms, you have to really differentiate and figure out what the person is actually doing, you know, because they get thrown around too much. And someone that's selling you an insurance policy is going to call themselves an investment advisor, but they're just selling you insurance, and that insurance may have some type of investment component to it. Yeah. Meaning they'll put you in a high fee mutual fund, you know.
So what does a CFP do then? What's different from you
So a financial planner is different. A financial planner
certified financial planner.
Certified financial planner. Yes. Should be considered a little bit different from just an investment advisor. An investment advisor can be a financial planner, but an investment advisor, the term is usually someone thinking just about your portfolio, your investment portfolio. They're managing, maybe they're picking stocks for you. They're literally taking care of your portfolio. They may do other things too, but maybe not. A financial planner is somebody who is looking at your financial life holistically. In fact, investments is a small piece of the puzzle for a financial planner, a good financial planner. And that's the thing, like some people come across some really bad financial professionals, some bad planners, bad investment advisors, bad insurance salespeople. So you have to really know that someone that really is going to look at your financial life holistically, investments is a small part of it. There's all this other stuff. There's tax strategy. There's cash flow allocation. There's estate planning.
Well, there's also the intangibles of like the mental side.
The mental stuff.
Because so many people get, you know, it's easy to focus on what's my return, what's my allocation, what are the numbers. But as we've all experienced from doing our own investing and in our community, the mental game is really the hardest part for a lot of people. Right. Both on like the trading and investing side, but also just managing your life. Right. Like estate planning. Like how many people have we seen that have had their families ruined because the patriarch or matriarch didn't set up the right structure, and now everybody's fighting over shit. Like people don't really think about that until it's too late.
Yeah,
right?
Or they don't even think about setting a beneficiary on their brokerage account, you know? And
or like saving on tax, like strategizing taxes. Like that is most people's, I think, number one expense, right? Probably more so than your primary house or residence is like taxes. If you're a high earner and you're not strategizing that shit, you're going to lose a lot of money that you could keep.
Yeah, and you know, it goes down to, as investors, which there are people in here that's probably their main focus, even something like knowing that you're investing in the right kind of account is so important. You know, like if you are just going straight for Robinhood or, you know, and not thinking about all the other ways you can invest, and even do your stock picking and even maybe invest in crypto via an IRA account, a self-directed IRA, like there's ways to do this the right way. Yeah. And I think a lot of those points are really key.
The whole comment is so flawed too. The original comment of this is why Americans are broke because of financial planners.
Yeah.
It's actually the opposite. Most Americans do not have access to a real financial planner.
It's a great point.
And could benefit from it. In fact, it's like the top 5% or maybe the top 10% of wealthy Americans that mostly have access to like real financial planning. And, you know,
that's been the problem.
Yeah. And that's what I think you've been trying to solve that problem with She Talks Finance. You know, I know you don't like take on clients because you're busy managing your own investments, but you're trying to help people basically be their own financial planners in a way.
Yeah. I mean, there's a way to do it yourself with financial planning. And I have I built a whole entire training program that literally, it's like I'm there with you, you know, walking you through. Like, that's the thing. The financial industry makes this stuff so cryptic and so secret. It's like, oh, you need a planner, you need an advisor to be able to know how to do this stuff. And you know, that's just not true. Like,
you don't have to pay someone 1% to manage your funds.
You really don't. And there's, if you are willing to put in the time to sit and learn a little bit, like you can really make a huge impact in your financial life. most people's financial lives are simple.
Yeah.
You know, most people aren't millionaires and billionaires, and they don't need complex trusts, and you know, most people don't. And those are the people that I'm trying to touch and give them the information.
Here, here.
Love it.
Cheers to that.
Cheers.
Cheers to bringing financial literacy and good financial planning to the masses. And good whiskey while we're at it.
I love that photo that you showed in the video. Your shout out to the haters video,
My
or
mean
your
comments video.
Your call out the haters video. Yeah, the one in the middle that shows like the stack of books and note cards, and to me that just sort of represented like all of the many hours of work that we know that you put in, because we were there and we saw how much work you put in.
Yeah.
But to get something like the CFP designation, it takes a tremendous amount of like study and effort, and there are unfortunately a lot of bad actors in the finance space, but I think CFPs as a whole, like on average, are not those people.
Hey,
Yeah,
you know who's the
your
worst
shit.
though?
Yeah.
You know who's the absolute dog shit of the financial industry?
Who?
Those hedge fund investors.
Oh.
Those guys that take other people's money and grow it for them. I don't know. There might be one at this table.
Hey, there are some really bad hedge fund managers and analysts out there that
Yeah.
have
You,
lost
you know
people
what's
money.
funny? Like a lot of people don't even know what a hedge fund is or like how it works or like
Yeah.
You didn't have like a license, right? You just like were basically you work for the fund.
Right.
And then you made people a shit ton of money.
Yeah, yeah. The hedge fund industry is so weird, right? Because it is typically you're not going to. I mean, some hedge fund analysts and portfolio managers have a CFA designation or a series license.
Oh, true.
And the CFA, similar to the CFP, takes a tremendous amount of study time. It's actually 3 years worth of tests at a minimum. So it's a legit credential in terms of like your stuff from a the theory perspective, but making money in markets is a whole nother skill set. Like,
Yeah.
just because the stuff in the books doesn't mean you can make good money and make good returns.
As
Yeah.
we know from 2020, things do not always work out academically.
That's
Yeah.
right.
Like you were taught.
Well, and there's a lot of subpar hedge funds out there, obviously. But
Yep.
for anybody that doesn't know, I'm just gonna shill Trav a little bit here. He helped grow one of the best performing hedge funds of the past 20 years, maybe, or since 08 or whatever, from about 100 million in assets to over $1 billion. And you guys have had one of the most highly public track records. And then you were like, made a bunch of money and were peace out. And then I scammed you in to come hanging out with us and helping our community. So
Yeah,
that was
that's
awesome.
right. Yeah, no, cheers to that.
Hey man,
Cheers
you've
to that.
helped me build some wealth, getting me out of the day trading mindset and into the long-term investor fundamental mindset.
Yep.
Like that was game-changing for me. But that would have never happened if I didn't meet you.
Yeah.
So, cheers to that.
Cheers to that. Yeah. What I love, I think, about investing and really like the hedge fund side, there's some things that are great about it and some things that are terrible about it. And like I said, it's such a big industry now that it's like hard to generalize about it. Like there's
True.
some really terrible ones and some really good ones. But what I love about it and what I love about, trying to make money in markets is that it's one of the most competitive games in the world, but it's also one of the most rational and one of the most, what's the right word I'm looking for? Like, I mean, you either make money or you don't.
Right.
Like, there's no bullshitting around it. You either created
cutthroat.
wealth. What?
Cutthroat?
Yeah, or just like it's
objective. It's like
yeah, it's objective. Maybe that's the word I was looking for. It's a game.
it's a performance activity, right?
Yeah.
It's like if you're a professional athlete, you've got your stats, right? It's like, did you perform? Did you win or not? It's not like,
That's
I
right.
did okay, but I floundered.
Yeah.
No, did you make a lot of money or did you lose money?
Yeah, it's mostly black and white, at least over a long enough time frame. Like, yeah,
Right.
you can underperform for 6 months or 12 months, but ultimately over a 5 or 10 year track record or more, it's like you prove black or white whether or not you were good at what you did or not.
Yeah.
And it's not a game of politics. It's a game of, did you make your investors and yourself a lot of money or did you not?
Yeah. Do you think you'll ever trade or invest other people's money again? Or do you feel like you want to stick with your own?
I go back and forth on that a lot. Obviously, I'm very active in managing my own capital, my family's capital, but I have toyed with the idea of, managing a fund with the right set of investors that I kind of handpicked and that I trusted. I wouldn't do it for ego's sake or for, because I could go do that. I could have kept doing it. I feel like I can do it at the highest level and be successful, but what do I really contribute to the world if I'm just making other college endowments more money and things like that?
True.
I would want to do it for people that I think will do the right things with that wealth over time for society. Like, it would have to be that sort of setup.
Interesting. Yeah, that's good.
I'm also interested in the idea of being a constructive activist and helping some of the public companies that we identify that need operational help kind of behind the scenes that could 5x or 10x their business if they would just do this set of playbook things, right?
I've always remember those little times I would be like, put us on the board, that is very, very interesting. There are so many different companies that we come across that we're like, what are you even doing? Get me in that conference room. Let me talk to you.
Yeah.
See, that seems way more exciting to me than, like you said, making rich people richer.
Yeah.
Right. We could instantly, I think, raise maybe 50 to 100 million bucks and start a fund, and then within a year or two have half a billion or more. Right. But I've never managed other people's money, so I don't know if I'd be any good at it. It's hard as hell just trading my own capital and building my own wealth without somebody looking over me hey, did you make me money today? I don't know how I'd do under that situation. But you've obviously done that very well.
It is, and there's, like you said, there's a tremendous amount of stress involved when you're managing other people's capital.
Yeah.
You'll get a lot of your time if you're running the fund. Especially if you don't have a big team around you, a lot of your time is spent, handling investor calls, handling quarterly or monthly updates,
yeah.
Sounds
handling accounting.
miserable.
Yeah,
That doesn't sound up your alley.
No.
I mean,
I'd be like, leave me alone. I'm going to have
I don't know.
yeah, what am I going to do on the call?
Oh yeah, the market drops 5 or 10%. You're getting calls, and
God.
you gotta, make sure everybody's calm and.
That's a financial advisor's or financial planner's job too. They're getting those calls all the time.
True. I know in our community, when there's a big move, you can sense in Discord the emotions come up and people are like, "What are you doing? What are you doing?"
Yep.
But it's different because we're not responsible for their capital. But at the same time, we do have a sense of responsibility that we want to be on top of the market. So in a way, it helps me be dialed in and be a better trader. But yeah, just the idea of working with other people and managing their own capital, it just seems so weird and different.
Yeah, it's a lot.
Yeah.
I really just prefer two things. One, the pure investment research aspect. I just love researching new investments and trying to find asymmetric investments. And then two, I just love trying to help the common man, your everyday person, people the people in our community who are not billionaires, who want to come in and learn more about investing, who want to come in and get access to good ideas. And and those things, to me, even though I'll make way less money over time probably, are just fulfilling from a personal standpoint.
Yeah.
I know when we've done the live events, in Cayman and Amsterdam and here in Austin, it's always cool to get pulled aside and you hear hey man, I don't really want to tell everybody this, but I had a little bit of money and now I'm set.
Yeah.
We're talking about life-changing wealth. I've heard that so many times that's what gets me juiced.
Yes.
Right.
I think that sometimes for us, we're already kind of programmed to act the way we do and think the way we do, and for us, we can handle corrections, we can handle panics and all of these different things, but I think that we underestimate the impact that we can have with the littlest bit of advice, to a community member that could really change everything for them.
Hell yeah.
Because I talk to a lot of people, and most people are, we think on a very professional level just because we've been in the industry and it's where we've been trained to do this. But most people, they are coming into this blind and they don't know, and they're trying to do it because their neighbor's doing it and they're wanting to do it.
Yeah.
And they're not necessarily trained. So that's why what we do, I think, is so important, and it goes so much deeper than it's needed work. This is why I do She Talks Finance. This is why you do what you do. It's needed work because people aren't learning this anywhere else. Like, where else are they going to learn how to manage emotions and how to analyze risk and analyze reward and make the right trade? And where else are they going to learn how to do that?
True.
You know?
It's definitely not taught in schools. There's definitely not a profession. The regulatory side of the financial industry is a fucking disaster.
Yeah.
Oh my God.
Yeah.
Don't
get us started.
Oh man. Yeah. Maybe I need one or two more whiskeys.
There's
before we
also
go.
a lot of bad acting gurus out there.
True, very
there
true.
are a lot of people on YouTube and TikTok and whatever acting like they know a lot and they're the best, and some of them are really great, but a lot of them are really misleading.
True.
And they bring people into the wrong investments, or they
get
teach
paid to
them
pump and
to be too emotional, and then they're not. I don't know.
Yeah. Yeah, we could go on and on about this.
That's my rant. That's my mini rant.
I needed this rant. Thank you guys, because we went through a lot of heavy China stuff, and I don't know, what should we do? You guys want to do some charts and questions?
Can we do that Robinhood?
Okay, yeah. I think I've got the link up
Thing.
here.
Because
Okay.
I find this fascinating.
Robinhood is going on a college tour to recruit new customers.
They are literally bringing in Robinhood executives to different colleges to recruit them to sign up and get $15 worth of stock.
Wow. I mean, okay.
So let's talk about this. Let's roundtable this, because
So they're basically, this is kind of smart from a business perspective. They're signing people up and they're basically paying $15 a lead. That's how they're looking at it from the business side.
Yes.
And then they're doing a giveaway and whatever. And look, part of me goes, this is good, financial literacy, blah, blah, blah. And then I'm like, fuck that. Robinhood is not about financial literacy.
Ugh.
They're about gambling.
Well,
they teach
look.
gambling. They endorse gambling. That's all it is.
Yeah, we talked about this a couple shows ago. When you actually look at Robinhood's financials, most of their revenue is actually generated from options, like short-term options trading
Yes.
and short-term crypto trading. And so it's like, yeah, you can talk a big game about financial literacy and long-term investing, but the truth is you have incentivized everyone to be short-term traders.
Yes.
Let's be real.
And they don't even offer retirement accounts. Like, young people that are in college making money, if they want to do something really good for their financial futures, they should be utilizing a Roth IRA.
And
Like,
on the crypto side, you still can't even, they still don't like custody the crypto, right? Like you still can't even, there's technically not a wallet there, right? You can't.
I don't know. I'm not even on
No,
there. Yeah.
Last I checked on Robinhood, you couldn't send your Bitcoin or your Ether or
I think
whatever.
that's right. Yeah. If
to a
anybody in
wallet.
chat knows that, I talked to a guy the other day. He's like, I can't get my, I think he had ETH or something. He's like, I can't get it off. I'm like, what do you mean you can't get it off?
Yeah, no,
And-
like it's stuck on Robinhood. You can't actually transfer it out anywhere or put
you
it in
have
a
to
wallet
sell
off
it,
of Robinhood.
right?
I guess so.
No,
yeah.
you can't. You can't send it from Robinhood to a different address. Like,
Right. It's
from
not.
within
It's not
Robinhood.
like it's not like a where you actually have a real address. They just show you digital numbers on the
So
screen.
would you have to sell it to be able to buy one elsewhere that you have control over?
You'd have to sell it, then take the proceeds in your Robinhood account and transfer them out to another
Another-
account.
Yeah, you got to send the fiat to like a real exchange,
Coinbase.
and then rebuy. So that's a taxable event.
Right. And then you're giving up your cost basis,
Yeah.
whatever that may have been.
Yeah.
Okay, so here's my
And their platform goes down anytime there's any kind of volatility in crypto or stock markets.
Hey, to be fair, that has been most crypto exchanges too.
True,
Even Kraken and like Coinbase over the past 8 years or however long we've been doing this, they've always gone down.
Yeah.
Look, I am grateful for Robinhood and how they have made investing a phenomenon, a global phenomenon, really,
true.
right? Like, because
Gambling.
well, call it, like people that I never would have expected to come up to me and mention investing or Robinhood have done it. They're like,
Yeah.
oh yeah, I opened a Robinhood account. You'd be so proud of me. And I'm like, yes, that's great. I'm glad that you're like getting into it. And then they show me what they're invested in, and I'm like, oh no, like these are crappy biotechs, like stuff like that, like the stuff that the TikTokers are
But
pumping.
to be fair, we all started in the markets
We
that way.
did, and that's why I try to have
all started that
empathy
way.
here, and I'm
Yes.
trying not to like be too much, but I think this is a good start, but I think that they need to combine it with education.
Which I think they're trying to, but not really. I don't know.
Like, they need to be teaching long-term investing. People that are in college, they need to be starting now investing for the long run, because guess what? They have a huge runway. They're going to have to put way less money into their accounts.
Yeah.
And so I think that message is super important. But they don't really have that financial planning aspect of it involved with it. So people don't really know. They're just like, get a Robinhood account. Start trading stocks.
Yeah, they think they need to chase the
and
meme
that's
stocks
it.
to get
And
rich, but yeah.
I think that they could take this and make a lot of good out of it.
Yeah.
And set these kids up with the right education.
It's true. So with that, what's the next 10x over the next week? I think, again, I mirror your sentiment. It's always good to get more eyeballs on the markets and more eyeballs on the idea of investing and building wealth. It's just I hope people don't lose too much money when they first get started. Let's tell our stories real quick. Trav, how did you get started in the markets, and what did you do, and how much did you lose?
Enough, that's for sure. No, I think I first got started as like a freshman in college when I started doing my finance degree. Got very, very into trading stocks and options in college. I think I'd have to go back and check. I ended up. I lost a good amount of money initially, and then I started making money kind of later in college as I got better at it. I don't know what my ultimate returns were in college. I think I ended up just taking all that money out and paying off some of my student loans. And then I really started to do it, obviously, at a professional level once I got out of college and started working for the hedge fund. But I definitely had some like full 100% loss positions. Like I remember there was an internet stock that I bought. I think it was called Redback Networks. That was almost a total loss. I think I had a bunch of like short-term options trades where I was trying to do like options right before the earnings without any kind of insight into why they were going to beat earnings or not. And some of those would hit, some of those wouldn't.
Were you chasing like penny stock newsletters? Because penny stocks were a big deal back then, right?
I did a little bit of penny stock trading early on, and then kind of quickly realized that, like, holy crap, like the 50% spread between the bid and the ask was just going to crush me.
Yeah.
Like if I didn't nail something that was going up, like the spreads literally like caused you a 50% loss.
Yeah. I've actually traded some of the more, what I thought was even liquid penny stocks. And it's amazing how easy it is to get trapped in a position.
Oh, yeah.
And like, I know there's some like penny stock gurus out there. We don't even have to mention them by name. I thought the penny stock market was basically dead, but apparently some people are still trying to trade that shit. It's kind of like trying to trade micro caps. If you're a pump and dumper, all right. If you're a front runner, all right. But any real trader and investor ain't touching that shit with a 10-foot pole.
Hail to the no-no.
Hail to the no-no. Okay, so penny stocks, options, lost a bunch of money, went into college, learned your shit, went directly into the hedge fund industry.
Yep. And yeah, I kind of figured out, it was like, at first it was like, oh, I got to get the 5x, 10x gains. A lot of actually what's happening now mirrors what I was doing back then, which is everybody's trying to hunt for that big 10x, in a week or a month or whatever. And in reality, if you actually step back and you look at some of the returns that can be had from like longer term plays and finding like multi-baggers that actually have fundamentals behind them, way more money is made.
Yeah.
What it took for me to realize that was actually going into the institutional capital world and seeing some of the best investors of all time. I got to meet some of the best hedge fund managers of all time because when I was a sophomore in college, I interned at a hedge fund of funds, which was a institutional fund run by a big wealthy family that would invest their capital in other hedge funds.
Yep.
So we would go meet with these hedge fund managers and figure out what their strategies were and how their returns looked, and they would give us all of their stuff and basically say, this is what we've been doing, these are our returns. We got to ask questions. And I realized, I was like, wow, the smartest investors in the world are not screwing around trying to make, 500% on some option this week. They're going to make 500% on some position that they hold for 2 or 3 years where they've identified like some fundamental catalysts. They'll do some funky stuff, occasionally do some option stuff, but it's with like an edge. It's with an edge where they've figured out fundamentally something that the rest of the market doesn't understand. It's not a gamble. They're not going into earnings season and going, I think Apple's going to beat earnings, so we're going to put it all on call options. No, like they would find an edge. They would go figure out like why Apple is going to, have higher revenue than analysts expect them in 3 years, right? Or something like that.
Yeah.
Or some other edge where, oh, this company is in bankruptcy and they're about to recapitalize and their bonds still trade for 30 cents on the dollar and we think they could be worth, 5 times that, and nobody else is paying attention because it's this corner of the market where very few people traffic in. And
Yep.
Yeah.
it's that kind of stuff. Once I saw like what the smartest people in the world were doing in investing, I was like, oh, like there's money to be made still in large caps and mid caps and small caps.
Oh,
and,
yeah.
like lots of money.
Yep.
There are plenty of market inefficiencies
Yeah.
out there.
Yeah.
People argue that the market is efficient, and I argue that there are pockets of inefficiency that if you hunt them down and find them, you can make a lot of money.
Yeah.
Dude, that's such a good way to put it. Like there's pockets. It's kind of like imagine like little bubbles where they, not like literal market bubbles, but like bubbles present themselves and then they go away.
Balloons?
Yeah. They grow until they pop, right?
Yeah.
It's like in the markets, you have these pockets of opportunity where things are unknown and they're small and they're weird and they're not catching the attention of big money yet, let alone small money.
Yep.
And then all of a sudden, the bigger they get, it feeds on itself. That's what's happened to Bitcoin. People used to laugh at me back in the early days of Bitcoin, like, oh, you're a fucking idiot. Come back to E-minis. Like, no, this is where I'm going to make life-changing wealth. So Trav, you went the institutional route. You learned from the best of the best in the entire world. You've got the track record to prove it. Nikki, you come from more of the, I guess, corporate angle, finance world. You started short-term trading, and now you're, I'd say more so on Trav's time frame.
I was a day trader, and I thought that was going to be my way to riches. And I was just...
Which you were doing well.
Yeah,
you were technically a very good trader.
I mean, I was doing okay, and then the setups, the stop losses were just... The market knew my strategy.
Right.
It was like the market learns our setups, whether you like to think it does or not. Like,
Right.
It knows.
Market dynamics change.
You're going to go long on an intraday breakout? Okay, we're going to run that, and then we're going to stop, then we're going to run it down and stop you out. In fact, I encourage everybody, if you're day trading and you're, trying to buy intraday breakouts. Buy intraday breakouts, look at the patterns.
Yeah.
This is a pattern I'm seeing day in and day out. I saw it on AMC plenty of times over the past few sessions or last week or whatever. And it looks like it's going to breaks out to an intraday high. And then it sucks in longs.
Right.
And then it reverses and it breaks the low of the day.
So it makes a new low, takes out stops.
New low, it takes out stops, and then it runs back later. That's the pattern. You almost have to, if you think you want to get into a breakout, you almost have to wait. Be like, I don't trust this
It's
shit.
like, how would I counter trade the breakout first and then get back in once it actually takes everybody out and reverses? You be on the opposite side of everybody else's pain.
Yeah, and the market has just gotten a lot smarter. And so, when I met Travis, I was day trading, and I learned what you did and what your background was, and I picked the brain. I picked his brain.
Yeah.
A bunch, and then it just completely got me thinking, like, I want to try this. I want to do this. I want to do fundamental investing. I want to think more long term. I want to switch to swing trading, and that's kind of my progression.
Hell yeah. Trav?
I'll take a little more.
Moss Whiskey? How you guys doing out there? Everybody good? Let's keep going.
Let's do it.
Did we cover you?
No, we
Nobody
didn't.
wants to hear about me.
I mean, I do.
Okay. I'll do this quickly. All right. So in high school, I was in a stock trading competition. Came in. Okay. So I basically taught my economics class. I don't say that to brag. I was a fucking nerd in high school, only for economics. I got like F's and D's and everything
Yeah,
else.
because I was going to say, I heard you were like a hockey stud.
Yeah, no.
He was a hockey stud.
At one point, I was in shape and I could play ice hockey. But I sucked at everything except economics. I loved it. And I was like, oh man, there's this stock trading competition I'm going to crush. Guess what? I got dead last in the entire county. dead
Really?
last. And I was like, I don't know what happened because I'm the smartest. Like I was so cocky and all that.
Yeah.
And what it was though is I just got aggressive. I'm like, I thought I knew how to beat the markets. Here I am in 10th grade or something. And I'm like, I can beat the market. No, dude, you got punished. And like the bigger my drawdowns became, the more aggressive I got. And so by the end, I was like, well, I guess I should just like shut up and like go sit in the corner because I don't know.
Were you revenge trading?
Oh, definitely. It was a downhill spiral. It was terrible. And then, I went to work at a mortgage company and I was walking by one of the guys' desks and I was just doing like administrative work. And I looked and he had like all these like crazy charts on the screen. And I was like, Jim, what are you doing? He's like, I'm day trading E-mini futures. And I was like, he's like, come sit down, son. Like, let me show you what's up. And he was trading it. And in about half an hour, the guy made like $2 or $3 grand. And I was like, I don't know what that is, but I want to do that.
Yeah.
Like, we sit here and play a video game and make a few $1,000. I'm over here like running around with my detailing business and then working at the mortgage company, like trying to kill myself. And so I went head first into that. I like spent all day, every day for many, many, many years building systems, researching, developing, did well, had some tough years. What I learned though is like the shorter your trading time frame, the more competitive it is. And you're competing against funds that are way bigger and have way smarter people and way better technology. So I was at a disadvantage on all three of those levels. And then I was like, all right, let me start looking for other markets. And thankfully, I mean, I guess you could call this lucky timing because I didn't invent Bitcoin, but I was looking for a market like Bitcoin. Thought it was a scam in 2011, pushed it off. I actually thought it was a penny stock. And then we were talking about it in 2013. And then I was like, yep, this looks like something that's not going away. Let me go head first into it. And then the rest is history. Like,
You were the OG. Like, there was nobody else on YouTube making videos like you were about crypto. And everyone in E-minis thought you were nuts.
yeah, they were like,
Oh, yeah.
what are you doing?
Everyone in E-minis thought he was crazy.
It's a funny story on that. Yeah, I remember. I think it was 2015. We all went to a conference and spoke at a conference, and you actually got me into that because I didn't know the guys that were putting it on. But there were some interesting. I think like some gurus were there. Some well-known gurus. I won't even name them. But there were some well-known gurus, stock trader gurus that were there and put on the event. It was a fun event. And I got to speak and Chris got to speak. But it was funny because we were very much outliers. Like I was an outlier in the sense that everybody else was a trader and I was like a fundamental guy trying to like throw in some fundamental stuff in there.
Yeah.
And then you got up and gave a presentation about Bitcoin. And I think a lot of people were like, huh? Like they just like it was so early still. Most people, I think a lot of people in the audience hadn't even heard of it.
Mm-hmm.
Yeah.
And
I
They
felt
were
like
all like day traders, like stock day traders.
yeah. Oh, keep going. Keep going.
yeah, but I just remember when you look at it now, I mean, those gurus are still doing their thing and I'm sure they're doing well. But if you were to go to that conference, if you had gone to that and like paid attention to the people that probably were not like the most touted speakers, like you might have
made some
done a lot
money.
better.
yeah, you would have done like
pretty well.
amazing things, right? Like anybody who was in that audience who listened to, particularly to your talk that day about Bitcoin, could have been so early. I mean, I think Bitcoin at that time must have been at less than $1,000 bucks. Less than $1,000 bucks.
It was 200.
200, right?
It was on the day that I spoke. I believe Bitcoin was $220.
Unbelievable.
And I wrote this. I launched this book that month.
Yeah.
So that month, wait, was it that month? It was around that time. But I launched this book. I mean, it's so thin because I just wanted to get it out so quick. But I was like, people are laughing at this, but this is going to be fucking massive. And I can't not talk about it, right?
Yeah.
But it was interesting because I remember that conference, like, nobody really had any interest in that. They're like, how can we trade penny stocks? It's like, all right, cool. But like, this train's coming and it's going to fucking blow up. And
You were adamant about it too, I remember. So yeah, I hope there's a few people out there from that audience that like took notice and actually got into the market.
Yeah.
at least at some level.
I
Because
think so. We somebody said saw you in Vegas in 15.
That was
yeah,
it.
that was
Everything
it.
is
That was
Right,
it.
was
Yeah,
there.
Vegas
Yep.
in 15. That was the one I was talking about.
Yep,
Yeah,
yep.
that was a fun time too.
Yeah.
I was there too, but you wouldn't know because
You
I was
were
the
there.
only woman.
Yeah. I don't want this to turn into like a self-congratulatory thing, but I think it is cool to like look back on those times and be like, shit, that's where a lot of this stuff started, man. Like, you know, that's how you make a lot of money too, is you have conviction and you go heavy early, right? Before it's popular. I mean, look, now, we have a lot of people that are making tons of money today, but like, if you want to find a trend early and you have a lot of conviction in it, that's how you get really rich.
Yeah.
Not that I'm really rich.
I mean, it's all relative, right?
Yeah.
Like there's almost always room to be richer.
Oh, always.
we
That's a
don't
good
have
point.
We don't have 300-foot yachts, right? We
Right,
Yeah.
we
right.
can.
I don't have a ski chalet in Vail yet, so
Well, that could happen. soon.
Yeah, but you know, it's
that's my
not
goal.
always-
Good
You
bro-
guys mark my words.
God's Bryce just said I got that book when you released it.
oh
Donald said that book changed my life. Oh
Wow.
shit! Hey man,
See?
dude, that's awesome that you guys.
cheers to
Cheers to
Donald.
you guys.
Yeah.
Yeah, I did get like several hundred like photos of people that like sent me like a picture of themselves with the book,
Yeah.
and like I may scroll through those time to time when I'm having like a low day.
Heck yeah.
Yeah, I'm like, dude, yeah, because I don't know why else would we do this, right? Like, why else would we go through this trouble unless it like actually made an impact on people's lives, right?
Yeah.
Like, it's not fucking worth it unless people actually do something with it, right?
It's always better to get rich with friends than to get rich alone.
Dude, yes.
That's why we love this show.
Yeah.
That's why we love each other.
Yeah.
'Cause we get to talk about this stuff all the time.
Absolutely. We got Kev on the ones and twos in the background getting wealthy in the markets too.
Yeah. You know, I have to admit something. I screwed up the Bitcoin. Well, okay, I did and I didn't. I screwed up Bitcoin and I really screwed up Ethereum. I have an email from the Ethereum presale where I didn't participate.
Yeah.
And they were pitching Ethereum at a angel group here in Austin.
Yes.
I think David
Is it
Johnson.
Bid Angels?
Yeah.
Yeah.
And David Johnson. He had organized that group, and I had gotten the emails for some of these early crypto projects.
Yep.
And I have one from Ethereum before it launched.
Yep.
And I had the opportunity to participate in Ethereum before it launched at $1 or
Unreal.
whatever it was, probably under $1.
I forget what the ICO price was. Does anybody remember? It actually the early rounds were probably even cheaper.
It may
I don't
have
want to
been-
think about it.
Yeah.
I passed too. You
Yeah.
know, I passed, but I also passed on some losers. Mastercoin. There were several others from that first wave of alts.
Yeah.
I'm like, what do you mean? There's like, I remember thinking this. I'm like, you mean there's other cryptos other than Bitcoin? Like that was my first thought, and then I'm like, went down that rabbit hole, and I'm like, oh shit, this is gonna be massive.
Yeah. Bitcoin first came on my radar, I think even before 2013 when it was under 100, and I may have even found it on like Quora or something random, something techie where I was kind of clued into some of the early stage tech stuff. And I remember thinking, because I had that traditional finance background, I had spent a lot of time thinking about the Fed and monetary policy because of the '08 crisis. And so when I first saw Bitcoin, I was like, well, the governments aren't going to allow this to become a threat to fiat, and this will just die off. And then by 2013, I was like, well, okay, there could be something here. And that's when you and I started talking about it. And I bought some. I bought a decent amount of Bitcoin, a few $1,000 worth of Bitcoin when it was at like 200.
Yep.
And then it spiked to 1,000 on that first first massive run, or maybe it was the second massive run. Sold it all. I was like 5x. Woo!
Yeah.
Made a few $1,000.
Coming from where you come from, a
Yeah.
5X is amazing.
Yeah, I was like, oh, that's great. And, maybe this will be a bigger thing eventually, but right now it's overheated and got out and stayed out for a couple more years and then eventually got back in. But like, I blew it because like, imagine having conviction at 200 and then putting in some size and riding that or hodling that until, 50K plus. When I think about that now, I'm like, I was early. I was one of the people that was early to it, but did not recognize I actually did. When we had our conversations, those email conversations, I did realize, I was like, if you run the numbers and you think this gets to X percentage of the gold market, it could be 100K plus. So I did see the potential, but I priced the probability at a very low probability.
Right. You were in the Kelly formula on it or something.
Yeah, I was like less
Yeah.
than a 1% chance this ever goes above, 1,000 or 10,000 or whatever. And so I sold most of mine when it got to 1,000. And when I look back and I'm like, it really hurts to be there at the early stage and yet not stick with it.
Yeah.
And so to your credit, you bet like kind of your career bet on it. And I don't know. I just think that's
Basically,
that is kind of visionary. Not a lot of people did that. And the ones that did, have obviously been rewarded handsomely. So
Yeah.
Well, I appreciate that. Yeah. I mean, at the time, I questioned my own sanity at times. I'm like, similar ideas of like, I know there's an extreme bull case here.
yeah.
But I didn't know how to run the probabilities. All I knew was I was really pissed off at the traditional financial markets.
Yeah.
And I saw all the HFT firms competing out the little guy, the trader. And I'm like, for me, it was more like, how can we say screw the system and like be almost like a cypherpunk? And I didn't see Bitcoin becoming like a world reserve currency or anything like that. It was mostly like, how do we just operate outside this existing thing? And I'm like, as far as a tradable asset goes, I felt like I was like Michael Jordan playing against middle schoolers. Like I had a decade of like trading skill and like thousands of hours of in front of the computer, eyes bleeding, like
Candlesticks.
Right. I mean, I'm just like, I put so much time into this. And I'm like, it's so easy to trade. And it's more difficult now, but it's early days. It was like just shooting fish in a barrel.
Yeah.
But even today, with the amount of capital that's flowing in and the amount of new market participants, that is a trader's dream.
Yeah.
That's where you make a lot of money. Where you can't really make a lot of money is when you're trading a market like the S&P 500, where all the inefficiencies just get competed out so heavily against people that are smarter and wealthier than you. I'm like, I don't want to play in that space. I want to play over here where I can be a big fish in a medium-sized pond.
Yeah.
Maybe.
Yeah.
I don't know.
Yeah. That makes sense to me.
I think that it's still, if you have a longer time frame, I feel like Bitcoin is still easy to trade.
Yeah. Oh, yeah.
I mean, it's still
Don't day
hasn't-
trade it. Don't day trade
no,
it.
I would
Yeah.
never day trade a cryptocurrency.
Swing trade, position trade,
But
whatever.
position trade, swing trading it, I think that it holds its levels really well. The technicals are picture perfect still. Like,
Yeah.
you're not seeing a ton of crazy fake outs. I mean, from here, every now and again, you find one, but
You do get traps. You get you get
But-
stop runs and traps, but
they're
yeah,
clean.
they're
They're
clean.
still clean, and they're still holding, the higher lows. And I don't know. I just feel like it's still a pretty nice market to be position trading in.
Yeah.
Yeah.
Like right now, right? Like if this ends up breaking back above, what's that resistance level? Call it 50. And it breaks that pivot high around 52,000. You can almost expect that it's going to retest the all-time high for the most part. Like the trend is following through.
Yeah.
So it's
Yeah, the levels work. TA works in Bitcoin.
It does.
Right? Because there's enough of that self-fulfilling prophecy that makes it work. Like some people are like, well, Chris, how do you sell the tops and buy the bottoms? Like you've done it for so many years. Like it's because you've got to be dialed in on really the two major things. The technicals, but also market sentiment. Like when I was selling up in the mid 50s up here, it wasn't the technicals so much as it was market sentiment, knowing when things are just overheated and when people are too euphoric. And also like the panic of March 2020, knowing when people are just panicking too much.
Yeah.
Right? Like you've got to have a read on that. So those are like the intangibles. But yeah, as far as the chart goes,
But
way better.
Your years of experience in markets has helped you be able to recognize those things and manage
Absolutely
your
helped.
trades. And
Yeah.
that's what people have to understand is that when it comes to this stuff, you've got to get screen time.
Yeah.
You have to just get that experience. There's just no way around it. You will not see what I'm seeing or what Travis is seeing or what you're seeing in the chart or feeling with the sentiment until you do it.
And that's the beautiful thing. Like on as far as tools go, we've got tools like Bar Replay. like market replay where you can go back and you can literally like relive this price action. Like you can press play and like watch it as it plays out and like think about what decisions.
That was, oh yeah, we still live?
So the looks like our computer with screen sharing crashed.
Wait, what?
It couldn't handle it. Oh man.
All right.
Okay.
Oh,
Well-
so we're no more screen?
No more screen.
No more screen.
All right. Let's see. Kev, I'm sure he's gonna get that back up. Are we still live though? I think we're live. Can you guys still see us?
Can you hear me?
That's crazy. That's never happened before. The computer just couldn't handle the truth.
Oh man.
Let's do some Q&A while we're
Awesome.
getting
Let's
that
do it,
back
yeah.
up.
Yeah.
I like the bar replay stuff. I remember at our Amsterdam event, y'all did an hour-long replay of some of the Bitcoin cycles and how you would have thought about some of the technicals and trade setups going back in time. That was kind of cool.
Yeah. Yeah, it's like cheating, but like not really, because like you get to go back, you get to see what happened, but you know what the outcome is. But looking at that hard right edge is kind of like it trains your mind to look at price and like be reactionary based on what's happening. I don't know. I think that's pretty cool.
Yeah.
All right, cool. Yeah, we're still alive. Let's see. Will says, found your channel from the interview you did with Carter Thomas. Hell yeah. Carter's the man. Alex says, I remember seeing your videos in 2017 saying not to buy the top and to buy the bottom and learn. Bought a bit at 4K because you guys. Awesome, Alex.
Heck yeah. Oh, someone was asking earlier when you were talking about the self-directed IRAs and the crypto IRAs, someone was asking about providers that offer those. And I know of a couple off the top of my head, like
Yeah.
there's Alto IRA, there's Rocket Dollar, and then I think there's a few others.
Yeah, Equity Institutional is one of the larger ones.
Equity Institutional?
That they'll allow you to buy like Bitcoin, I'm pretty sure.
Yeah.
Yeah, there's a ton of them. Actually, if you see if I can pull up a few names while we're...
Yeah. I know a couple people also mentioned the uranium trade, which has done pretty well over the past week or two since we talked about it. Yeah, I mean, honestly, I don't know when we're going to get our charts back up, but the uranium spot price is already up near $50 per pound, which is wild to me because we were just at like 30 like a couple of weeks ago.
Well, I mean, you called it, right?
Yeah, I mean, and to be fair, I'm not the only one that's been calling it, but
Yeah.
we saw it early enough, and I've followed the
Okay.
uranium market for a couple years.
Kev, I don't have my phone on me. You want to give me the password? All right,
Oh.
we're back. We had to get the screen sharing back. Let's see if this is going to work. Yes. Good to go.
Beautiful.
Thanks for hanging out with us. All right.
Okay, so pull up that uranium spot price. I want to look at that beauty.
What's the ticker on TradingView?
I think it's UX1. Yeah, UX1.
Oh, there we go, yeah.
Yeah.
So this is something you talked about. Oh God, this chart is so weird.
Yeah,
So
it's very thin.
this is something
Oh,
we talked about
wow.
a couple weeks ago.
Last
Yep.
week we talked
Last
about
week,
it.
and yeah, uranium is the story right now.
Yeah, it's a fun trade. So I'm not sized like I want to be in it, but it is what it is. So, you know, luckily I think called it early enough for some people to get in, and hopefully they had more conviction than I did.
It's one of those weird things though, man. Commodities are weird.
Yeah.
Oil, gold, lumber, uranium.
Yeah.
Commodities are just a strange asset class.
Oh yeah. Yeah, so we'll see. This could continue, though. I think I said I think last week the potential for uranium to go to $50 to $100 per pound in the spot price, and we're almost at 50 already, which is crazy to me. I didn't think it would happen this quickly, but you know, the Sprott Physical Uranium Trust has been buying all the thin spot market supply and creating a little squeeze or cornering the market in a sense. and it's working. A lot of the uranium miners stocks are up a lot in the past couple of weeks. We've seen a lot of heavy call option activity in some of those stocks.
Sweet.
So yeah, they've had a couple of them have had a couple trading days where they paused a little bit or went down a little bit, but overall the trade's been working well. So I don't know. I don't see an into it in the short run. I do think, like I said last week, I think there is a potential for regulators to step in and say, hey, we can't have financial buyers be buying up all the uranium out there.
Yeah.
Because the nuclear reactors need it. But, for now, it's working, and I think it could continue to get a little crazier until, uranium or until the nuclear utilities scream too loud.
At what point would people be overstaying their welcome in this trade? Because price could go pretty parabolic, it sounds like.
Yeah,
I mean, it already has.
Yeah, I think
gone.
Kind of like what Chris was talking about a few minutes ago with sentiment. I think we're not at peak sentiment yet, but we're definitely in a frothier sentiment. More people know about the trade. I think if we're at $80 to $100 a pound spot uranium, I think that's the point at which you got to say, all right, it's probably time to cut loose and, take the profits and run. But
Yeah.
I don't know. It could get crazy. I mean, the all-time high, I think, price on uranium spot is like, 100, 120 or so? I have to double-check that. But, if we eclipse the all-time high, it's certainly a spot at which I would be nervous. I guess 140 maybe, 130, 140 it looks like.
Yeah, I guess it does look like it's got a lot more room to run on the chart.
Yeah, I mean, I certainly think 80 to 100 is possible. Now, investors might not price the stocks as if 80 to 100 is sustainable. And so, it's possible that the stocks may not reflect as much of that, but it'll definitely keep juicing them if we get to 80 to 100 pound uranium. So
Has Robin Hood or Wall Street Bets caught on to this?
yeah, I think I
Okay.
saw a post or two on Wall Street Bets where they had kind of caught wind of it as well. So the meme stock traders some of them are definitely behind this trade as well.
Awesome. So Kendrick was asking if dollar cost averaging is still a good strategy. I'm assuming you maybe mean crypto, but clarify. Dollar cost averaging, if you are really looking to be invested in an asset over a very long period of time, then dollar cost averaging has been the way that many people have done it, and that strategy is still a viable strategy. It also depends on how, because we're very particular on prices that we get on certain assets, right? Like we are watching pullbacks and
we're trying to be
we're trying to be
tactical.
tactical and time things to a degree. But if you are just a long-term investor that's not wanting to do all of that work, then dollar cost averaging is going to be one of the better ways to do it.
Especially
Definitely.
if you're early on in your investing career and you still have decades before retirement.
Yes.
Like you've said before.
Yep.
Yeah.
But, you could always also kind of vary it up too, where if you feel like market sentiment and market valuations are at a high level, maybe you do a little bit less, wait for a correction, put in a little bit more once you start to get the correction. You can try to maybe time it a little bit.
Yeah. I think that's something I definitely do. I mean, I am always looking to add more capital on any deep, significant corrections.
Same.
So you can have some money available to do that.
Yeah, and there's another question that's kind of in line with that. Christopher was asking, are you selling some of your core positions in Bitcoin now at these prices or still hodl to 100K plus? So I've already sold, it was around a quarter to a third of my position around 55K on this latest kind of bull run. So if you guys look back at any of the trade alerts or even some of the shows that we did, we ran the data on how many green months in a row we had in Bitcoin. And basically the probability of Bitcoin continuing to go up after 6 green months is very, very low. That's why I sold here. And so I've bought back some and I've traded a little bit inside of this range. But for now, because this is what I call mid-range, when you're inside the all-time high, but off of the pivot low, you're kind of mid-range here. I don't get aggressive here. Where I get aggressive is in the lows like when Bitcoin is down 80% or more off of its all-time highs, or when you're breaking out of a key level. So like I built into the biggest Bitcoin position I've ever had when we were in between like 4 to 10K. Like I was building into that over the course of several months, and then have been scaling out along the way on the upside. And so when we're mid-range like this, like I still have a pretty significant position, but like I have different capital buckets, right? So like I have my cold storage, which is like, you know, never touch. I have my position trades, if I can type, position trades, which is like, you know, basically a 1 to 3 year hold. And then I have my short-term trades, right? Which are like, you know, on average, like 2 weeks to 6 months. And then occasionally I'll take a day trade, but for the most part, I'm not day trading Bitcoin. But that's kind of my strategy. I don't think of like moonshot targets as like the end all be all. Like I really focus on these 3 things. Like I stack as much as I possibly can in cold storage. And then I build positions over time in position trades. And then I actively trade short-term trades tactically to try to build more fiat that I can stack into these other capital buckets.
So, question, if we see Bitcoin break out to a new all-time high, that would be a pretty nice looking breakout pattern.
Yep.
Is that something that you would be looking to do a position trade on, or more of a short-term trade on?
More of a swing trade.
Okay.
Yeah, like where I like to build into position trades is during accumulation zones, right? Where prices are way off the all-time highs. All the what I call Bitcoin tourists, they leave. They're like, Bitcoin's a scam. Once you start to see the obituaries hitting the mainstream media and all that, that's when I'm like, I get greedy again.
Bitcoin tourists.
Yeah. They come in, they get all hyped up. They're all excited during the bull market.
Yeah.
And then when prices are cheap, they're like, that was actually a
Yeah.
scam. Let me sell the low.
Isn't it funny how they need to be thinking opposite?
Yeah.
And they don't.
If
Like,
most people just did the opposite of what feels natural, they'd make a shit ton of money.
I know. Preach.
Preaching to the crier. All right. This is a question I think for Travis. Hey guys, if I started taking other people's money to invest in he said crypto space, but let's just use this as like a general thing. If somebody's going to raise capital to trade for other people, what legal/business moves should I be looking to make? And I'm going to add this on. Are there any other questions he or she should be asking?
Oh.
Trav.
Yeah, unfortunately, that is a kind of a regulatory minefield. It very much depends on how much capital and if you're raising from accredited versus non-accredited investors, at least here in the U.S.
Yeah.
Rules may be different, obviously, if you're in another country outside the U.S. But yeah, I mean, there are, in certain states, there are requirements to register with a state if you're managing other people's money. And, with the SEC, generally, like if you're only raising from accredited, like if you raise a hedge fund and you have less than like 25 million of capital, there are much fewer reporting requirements and registration requirements at the federal level if you're running a hedge fund that only raised money from accredited investors, right?
Yeah.
But if you raise money from unaccrediteds, people with net worths under $1 million, then you've got a whole host of restrictions and things that you're going to have to do, disclosure requirements, you've got registration requirements, you should go talk to a lawyer, basically.
Yeah. And I mean, like, would you add also, don't take that lightly. Like,
yes,
it's a very big responsibility managing other people's money.
Yes.
Like, I've never done it for a reason. You've done it at the highest level possible. But it's not something that you're like, oh yeah, let me just go start a fund and start managing other people's money. Actually, there was a guy, check this out. Here, let me give you guys the worst case fucking scenario for trying to trade other people's money, all right?
Yeah.
This is the latest article on CoinDesk. I saw this right before we got started. Crypto hedge fund fraudster sentenced to 7.5 years for Ponzi scheme. This guy had a lot of people going. I remember seeing this guy floating around social media, and he was in the news. He was on, like some of the mainstream channels. He's a young dude, 24 years old, scammed people out of $90 million and was sentenced to over 7 years in prison.
Yeah.
So do not mess around when you're claiming to manage other people's money.
Yeah, even if you're doing it the right way and you're not, running a Ponzi scheme where you're, paying off investors with new investors' capital, even if you're doing it the right way in terms of what you're doing with the capital that you've been given, you need to be thoughtful about the structure that you set up. Like even when we say like unregulated hedge funds, that's not even really true. Hedge funds still set up limited partnerships. They have, they have operating agreements, they have private placement memorandums that are handled by lawyers, right? Like they still have legal documents written and signed, and they still, try to abide by all the rules. So you have to be very careful when you take other people's money and start investing it. So I would definitely say figure out the legal structure that you're investing within, figure out, who your state and federal regulatory agencies are that you may or may not need to file with. Go talk to some lawyers. There are plenty of lawyers out there that handle this type of, think about how many investment funds are out there in the world. Like this has been done.
Yeah.
Just go make sure you do it the right way.
Hear, hear.
And especially if, like I said before, if you're raising money from unaccredited investors, you have extra requirements. So, go talk to the right legal advisors for that.
Great advice.
What's funny is that Bitcoin is not technically a security.
So
I always wonder, like, no, I everything he's saying is true. Like,
Yeah.
you have to do it no matter what. But I wonder, like, how different things are if you're just managing cryptocurrencies that aren't considered securities. Because, like, I know that.
So Bitcoin is a commodity under the CFTC. So you're still regulated.
It's still going to be under their jurisdiction then. Okay.
Yeah.
Then, you're going to have to register as an investment advisor. You're going to have state registration. Yeah. Definitely.
Yeah, just don't take it lightly. A lot of things can go wrong.
Got to get a Series 65 and all that stuff.
Yep.
Yeah.
All right. We've got some questions that were submitted through the website. WeTalkMoney.com. Van was asking
.com.
if you had $1 million in Bitcoin and ETH without any other assets, how would each of you diversify? Love the show, by the way. You guys are. Thanks. Appreciate you. So say all your assets, you're 100% in Bitcoin and ETH. What would you do? By the way, this is not personalized financial advice. This is general for education purposes only. We are not telling you what to do with your money. But if we only had, or not only, but if we had $1 million in crypto and nothing else,
Okay.
what would you guys do? How would you diversify?
I would definitely keep some of the Bitcoin and Ethereum.
Okay.
Maybe like 15%. And diversify out the rest.
15. Okay, that's lower than me.
But
I'm kind of curious. Okay, so you're 15, Trav. What would you keep in crypto out of your entire net worth, ideally?
10%.
10%, even
you're
lower.
more than me.
Yeah. Well, you have to keep in mind that my whole bread and butter is stocks.
True.
So like I
These
have
guys are evil. Don't listen to these guys. No, I'm just kidding. I'm kidding.
I feel like I can add a lot of value with my own, skill set in stocks specifically.
Yeah.
So I think
Yeah. Okay. Yeah.
So my comfort level, which again, it's all relative, right? But my comfort level is in between 30 and 50%.
Woo.
Sometimes when it gets over 50, I start to get nervous. When it gets lower than 30, I'm like, am I piking? What am I even doing?
50% is like, oh my God, I could
I know.
not
I mean,
sleep.
but like other crypto people are like, oh, you're a wimp.
I know.
Like,
I feel you.
But like, dude, I'm like, if Bitcoin drops 80%, that means my net worth goes from that to that. No, I can't handle that. Like, everybody has a different risk tolerance, right? So
yeah.
that's where I'm at.
And then the other
Matt said 15% crypto, 85% meme stocks. There you go.
all on GME and AMC.
There you go. Boom.
No.
All
Please
right.
don't do
So we're going to diversify. What other assets? Stocks, whiskey,
I'm loving land. I'm loving land right
Dude,
now.
Land.
I'm all about it.
I think Bitcoin people should love land because A, there's a finite supply.
Yes.
B, there's a finite supply.
Basically.
And C, you can't make more of it. You know, it's like
There's
it's
a
finite.
finite
And there's good land and there's bad land. I've learned a lot about land over the past couple of years. I've been buying some very quietly. But yeah, I want to be one of the largest landowners in certain areas.
Yeah. Land, stonks, of course. A little bit of gold. I'd probably be mostly in stocks. And I'd maybe have like a 5% gold allocation. Maybe 5% land, 10% land, something like that.
Yeah.
And then some real estate in there.
Definitely some startups too, though.
And some angel investing. Yeah.
Yeah.
A mix of all of that.
It's a pretty good mix.
Yeah.
I would even probably diversify some of my crypto holdings into some more high risk projects, almost like an angel investment, somewhat.
Yeah.
But even some existing projects where I think the longer term potential could be 10 to 100x
On crypto, like altcoin projects?
Yeah, exactly. Yeah.
That's how I look at it too. So like my
Yeah.
crypto portfolio is, my God, it swings so much. I don't even know today.
Yeah.
I gotta look it up, but it swings. It's usually I'm gonna give very broad numbers, but like 50% Bitcoin, a quarter ETH, and a quarter everything else. Like, but that swings massively, and that's probably inaccurate as of today. I gotta run the numbers. All right, cool. Moving on.
Cool.
So Van, hope that answered your question. Southwest was asking, can you discuss your high probability setups and how you find them? It's a good question.
You want to go first?
Yeah, why not? So I look at setups mostly based on the chart, something that I can back test and verify at some level the probability of success. And then I have different setups for different market conditions. I have bull market setups. I have bear market setups. I have accumulation range setups. And then each setup comes with its own risk profile and each way of getting into the trade, different profit targets, different ways to manage risk. But they basically fit into those three buckets, right? You're either in a bull market, a bear market, or an accumulation range, or it's choppy and I don't know and I just stay out of it. If I can't look at a chart and within 2 seconds tell what the hell's going on, I don't even mess with it. Unless I do more work and I figure out a thesis for it. But that's basically it. I break out. So on a bull market, breakouts, dips, parabolic rips. On a bear market, parabolic shorts, breakdowns. That's basically it. Accumulation range, buildups. Yeah, I don't know. We talk a lot about this in the community, but there's basically a half dozen or so setups.
This is all very technical. You'd probably have to like show the charts and show the setup.
Very technical based, but backed up by market sentiment and tokenomics.
Right.
So
yeah.
The chart can be beautiful, but if the tokenomics are wonky and there's a cult leader behind it, or the supply dynamics are weird, I just won't touch it. I'll let other people get rich. I'll have JOMO, joy of missing out. There's a lot of people that like to troll me from time to time. Oh, you missed out on this one. Oh, I fucking love this coin. I got rich. Great for you.
Yeah.
I'm not gonna hate on it, but I'm not gonna act like I missed out.
Yeah.
Yeah.
Yeah. This is a game where omission is fine. Like in stocks we have 40,000 plus stocks globally. I'm not going to nail every winning stock. In fact, I won't even nail 1% of them. But that doesn't matter. I can still get super rich nailing a handful.
Yeah.
Same in crypto, right? Like,
exactly. Yeah. It's like, what's the old Buffett quote? It's like, you don't strike out by passing on pitches.
Yeah.
It's like you can watch dude, how many angel investments pitches have we seen that we passed on? Hundreds, right? Like, it's okay to say no. Like, I think your number one, actually, there's two phrases as an investor you should learn: no and I don't know. Like, unless you have a lot of conviction in something, protect that damn capital.
Yeah.
Fair point. Yeah.
Very well said. No, and I don't know. Yeah.
Yeah,
the
this
whiskey is
helping,
making you
right?
very wise.
I don't know, man. I don't know. I'm going to watch this later and be like, God damn, I was a bubbling fool. No. All right. setups for you?
Setups, high probability setups for me are finding things that have very low downside and a number of different fundamental signals. So as opposed to you are able to focus a lot more on charts in crypto, in stocks, we have a lot more things from a fundamental perspective to look at, financials, management, signals like short interest and insider buying, hedge fund ownership, right? Who owns a stock? What kind of growth opportunities does a company have? And all sorts of other things that
What's that E word? It starts with an E.
Earnings?
Earnings. Yeah. In crypto, we're not really used to that now.
Yeah, exactly.
No, earnings are, it's like the people in crypto that hate on stocks. I'm like, dude, you know what earnings mean fundamentally? Like what that is? Like, oh my God, it's so powerful.
No, it's the Fed. It's just the Fed.
Exactly.
No.
Yeah. Fed-induced bubble. Yeah, but there's companies that are actually making money behind it.
Yes. Yes.
Actually,
So-
yeah.
Yeah, I mean, Starbucks probably made $1 off of this today, off of me, right?
Yep.
Multiply that by a few tens of millions of people every day, and that adds up.
Yep.
But yeah, we have a lot of fundamental indicators, and when you can triangulate like a number of those signals at the right time, when perhaps sentiment is overly pessimistic and the valuation of a stock is overly pessimistic, and yet you have like maybe there are some green shoots where things are improving, and you're at a level where there's some sort of protection of downside. If you can combine all those things, then that is like the holy grail of, finding an asymmetric upside to downside investment. So that's what I try to find. Not everything I invest in looks like that, but you can look at some of the videos we did last year on some of the stocks like Mac and Nordstrom, where it was like, okay, there probably still is some risk, if the world goes to shit, but at these prices, I think you're looking at a 3 to 5x upside with very limited downside given what we know today. And those investments worked out really well. Some of the big positions this year that I have been working pretty well, like Dropbox, and I know I've talked about some other ones, but Dropbox, for instance, was trading at a single-digit multiple of cash flow, has beat its earnings estimates every single quarter for like the last 13 or 14 quarters. Management's buying back stock. It's not a sexy growing at 50 to 100%, but like from a downside perspective, if you can remove massive downside from the equation, then it's all good. Then it's just upside from there, right?
Yep.
So that's what I try to look for.
Hell yeah.
Yeah. And all that, everything he just said, and then add the technicals, and that's my high probability setup.
Yeah, you're like a hybrid of us two.
Yeah.
You're like best of both
Yeah,
worlds.
I'm like, all that, I find all that, and then there's like this technical pattern where maybe it's doing like a bottoming consolidation, forming like a ascending triangle at a bottom, and there's a high short interest, and there's like a breakout potential, and then all of that, that's like my
That's where Trav's so
highest.
valuable. Like he just does all the work and like finds those asymmetric bets, right? Where you're like, here's the reality behind this company. Here's the situation. Like, here's why I think the risk is this and the upside is crazy. Or like most times it's like, oh, well, there's really not an edge there, so it's not worth looking at, right?
True.
Like you got to pass on a whole lot of dogs to get to the beauty queen.
and a lot of times we do have to go through some drawdowns. Like
Oh, yeah.
some of these stocks where, I won't nail the bottom. And even though I think the setup is right, I might have a 20 or 30% drawdown before it starts to work. And then hopefully from there, then it goes up 300, 400%. But I might have to take a 30% drawdown. And I should say too, my batting average isn't going to be 100%. Like I definitely had some stinkers. Last year, Rolls Royce. This year, had a couple stinkers. I'm forgetting, but I mean...
Wish? Was Wish a stinker?
No, we
you did
actually
good on
timed Wish pretty well.
What
That
was
was
the
not.
stinker? There was maybe.
What was recently like a Tyrion? Although we made
Oh,
money on that
Tyrion.
on the upswing.
Yeah, you.
And then I added back on the downtrend and lost money. Anyway, there's been some trades like some of the SPAC option trades where I feel like we've identified an asymmetric upside to downside. They haven't worked out yet.
Lost
Yeah.
was a stinker.
Lots got out of that one though. I mean,
Yeah, you did.
I know some community members unfortunately stuck with that one, but we try to get out when the thesis changes or when we identify a major risk that shows us there is more downside to come. But look, I mean, the point being there are going to be situations where we're not going to be right. Like I'm trying to hit like an 75 to 80% win rate. and have enough upside in the winners that they're going to more than offset any kind
Yeah.
of losers.
Yeah.
So,
And this is where position sizing is so important because you're
Yeah.
not going to win every single one.
Yeah. Yeah, no, it makes sense. It's kind of like if you think of yourself as a casino, right? If you can win more than you lose, and then on average, your winners are bigger than your losers, it's called a positive expectancy. That's what
Yeah.
I fought so damn hard for day trading, right? And like sometimes you get it, sometimes you don't. But the longer you lengthen your time horizon, I think the better those odds become, right? Like that's what I've learned. I guess, it's been, this year is, 21 years. I've been in the markets 21 freaking years. I can't believe that. Like, that's crazy. And
You're old.
I'm old, man. I don't know. I think
Are
about
you
that.
sure?
Yeah.
Are you doing that math right?
I'm doing the math right. Yeah. Like I started trading in high school.
Shoot.
And yeah.
you know what's cool to think about though is that those first 20 years you really put in the hard lessons, and hopefully actually the next 20 are going to be some of the most fruitful of our careers because
Yes.
Yeah.
we know enough to be dangerous. We know enough about risk. We're not like blind to it. We have the tool set, hopefully.
Seen a few
and
cycles.
Seen some cycles.
Yep.
Hopefully, that means the next 20 are going to be even better than the last 20.
I mean,
Knock on wood.
didn't Buffett not get super rich until his 40s?
I mean, he did very well. Don't
Or
get me wrong.
something?
He did very, very well from the age of his 20s and 30s, but he didn't make his first billion until he was in his 50s.
Yeah.
There's hope for
So-
us.
I hope I can have $1 billion net worth before the age of 50. That would be cool.
That'd be awesome.
Man,
Yeah.
you'd be flying everywhere, private yachts all over the world.
Yeah, I don't think it would change my day to day that
Ski
much.
chalets
but-
everywhere.
Yeah. Well, I don't know about all that.
I mean,
Hey, do you guys know we just went over 2 hours?
no,
Wow,
I,
it's definitely the whiskey.
Damn.
I'm hungry. I thought my stomach was growling.
Yeah, it's been 20 minutes and you haven't eaten, so.
Hey, props to everyone who's still here.
I know,
Yeah,
that's
thanks for hanging
amazing.
out with us, guys. I hope you've learned something or had fun or I don't know. I don't know why you're here.
Gotta laugh. Laugh at us.
Yeah, look, if you guys aren't in the community, I don't know why. Go check us out. WeTalkMoney.com/community. Got the link up here. Yeah, I don't know. I'm not going to
Yeah,
trip
you
on
can-
words. Go check out the webpage and you can see what we do. And if you want to hang out with us, you can. If not, that's cool too.
It's the coolest community
It's
ever.
the best. I mean, yeah, we've got a great group of people. It's no pumping, no dumpy, no bullshit. Like we keep it real clean and small. Like, I don't know. I love our community.
Yeah.
I love you guys.
I know.
Let's look at some Q&A from the chat. Sorry, guys. We haven't been ignoring you. We've just been buzzing along here.
Crypto Bits is asking about. We get this question from time to time about small accounts when you start out small.
What's the question?
His question is, or his or her question is, how do you trade when you have less than $25,000 and are limited to 3 round trip trades every 5 days? 10-year time horizon. I don't know if I fully understand your question there, but
So basically, if you're not a pattern day, if you don't meet the pattern day trader rule, which means you need 25K in your account, or else you're limited to 3 day trades,
yeah.
or
Well-
3 round trips. So basically, you do what our philosophy basically is, which is trade less, profit more.
Exactly.
Like that, I've been beating that drum for many, many years now. Like less is more in the markets.
Less
Like,
and longer time to
yes.
hold. Yeah.
Like the biggest mistake I see traders make is they come in the markets and they think that more pressing of the buttons, more trades in and out is going to net them more money. It's not necessarily true. And in 99.9% of the case, it's going to be the opposite direction, right?
Yeah.
You're going to lose or underperform the more active you are. So trading and investing is not like running a business where you're like, more funnel, more leads, more conversions, more sales, more blah, blah, blah. That's not how trading works. It's the opposite. Less activity equals more gains in a lot of cases, right? Like there's always edge cases and whatnot, but on average, the less you do, the more you're going to make. So I don't necessarily think the pattern day trader rule is a bad thing. Obviously, I'm always for less regulation, but I don't think people with small accounts should be out there day trading penny stocks.
Yeah.
Just don't think
Yeah.
that's the best way to build wealth. Like,
It's there for a reason, I think.
yeah.
I mean, they know most traders lose money.
Yeah. They're like,
And
okay,
SEC is
they have
trying
the
to
data.
protect investors, right?
Yeah, they have the
So-
data, and they're like, look, fucking everybody's blowing their money out over here. Can we try to pump some brakes on that, right?
But you know what? There are some people that are just going to want to prove you and everybody else that's saying that wrong.
Right.
And just know going into it, like, if you're going to do it no matter what, know going into it both sides and experience it for yourself, but do it with a less amount of money.
Sure.
You know, like do it with a little bit of money, prove to yourself that you can do it, and then you can scale up. But yeah, I think that, you know, trade less, profit more is definitely key. And I would be thinking about ways to learn swing trading, longer hold times, months, maybe even 6 months, up to 6 months. Like,
Yeah.
find those high probability setups, technically that have that fundamental tinge, you know, and that's the strategy. I mean, that's the strategy.
Yeah.
Yeah. I think a lot of people there are some traders out there that say if you have a small account you need to swing for the fences, be super concentrated. I think you should always manage it, even if you have a smaller account, especially if you plan to add capital to it over time. You should always manage it as if you're managing a big account. Maybe you go a little bit more, like if it were me, maybe I would go a little bit more concentrated. Like if I had to start over today with less than 10K of capital, I think, you know, I'd be pretty concentrated, but I wouldn't be putting into one stock or, you know, one crypto at a time. Like I would take some shots. I would definitely take some, you know, some of those higher risk, high reward plays, but looking for the multi-baggers still trying to find asymmetric setups, still willing to hold stuff for, you know, 6, 12, 18 months, and just try to treat it like I would a bigger portfolio.
If you choose the right position, you can take $1,000 or a couple grand and turn it into a lot of money.
Yeah. And hopefully along the way, you're also adding more capital in, especially if you're younger.
Yeah.
You know,
Yeah.
we all started
Yeah.
with smaller capital
Yeah.
bases when we were younger. And over time, the goal is to just keep shoveling as much capital in there as you can.
Yeah. Well, and you guys have had scenarios where you've taken a little bit of money and turned it into larger, like, what was it?
Square.
Square. You put what, $2 or $3 grand in
Yep.
initially.
I think I put in $2,700
and now what is that worth? Like,
yeah, it's definitely worth probably over 60.
yeah. So
plus.
like you
And
can,
that's just that part. I ended up buying more in 2020. I'm not even counting that position.
Right.
But you can take a couple grand and turn it into a lot of money, but you've got to be patient. You have to do your, you know, do your due diligence. And like I held all those years,
yeah.
you know, even though I don't know, it was not easy. Of course you see profits, you want to take them, but there were fundamental reasons that I stuck with it.
Yeah.
And so just kind of putting all that together.
Yeah. Makes sense.
Yeah.
And pattern day trader rule doesn't matter to me, you know,
Yeah.
like in that case, if you're doing it that way.
True. Yeah. I think the pattern day trader rule is meant to stop people from being hyperactive. Which that's the number one killer of accounts is hyperactivity.
Yeah.
Yeah.
We've got several questions throughout today about inflation and how does Bitcoin react to that? Like, you know, does inflation affect Bitcoin? Like, that's part of the narrative, right? Like it's not like, oh, this month or this quarter's inflation numbers were X, therefore Bitcoin's going to react that way. That's part of the narrative. Inflation is heating up, therefore Bitcoin is probably going to respond to that in some way.
100% agree. That was the same exact thought that was in my head when you mentioned that question. Was the general inflation globally especially matters to supporting one part of the Bitcoin narrative, but it's not like Bitcoin's trading 1-to-1 correlated with CPI or something, you know?
Yeah.
Yeah, you kind of said it perfectly.
Okay, cool.
Yeah.
Well, look, we can wrap it up there. My brain's getting a little foggy. We've been going for over
Yeah.
2 hours. Guys, thanks for sticking with us.
And we still have over 200 people watching. That's amazing.
Hey.
That's fun. Yeah, thanks for Kev for being back there switching the cameras for us for so long. yeah, I hope you guys got some value, maybe had some fun, maybe shared a little drink with us.
Now
Yeah.
I need to go have a glass of wine.
Yeah, I can't believe you were going.
I have to have dinner first.
Oh,
I
okay,
can't
I
drink
see.
on an empty
That's
stomach.
important.
See.
You know this.
Awesome. Well, you know, unfortunately, this is one of our last shows in this studio.
Yes.
Sad.
But we'll be back
Yep.
with a different setup.
Yep.
Setup. What will it look like?
I don't know. We'll see.
I don't know.
Maybe we'll be on a private
We're gonna
island somewhere.
be, yeah, we're gonna
Who
be
knows?
going places.
Yes. Maybe dropping some hints that, you know, as things start to open up, maybe we'll start to have more fun. I'm itching. I'm ready
Man,
to get out
yeah.
there.
Yep.
Yes.
Yes.
Let's go.
Let's do it. What's up, Vietnam? Hey, where's everybody from? For you guys that are watching live, I just want to kind of hear where everybody is in the world. I always like to ask that because, like, such a global thing at this point. Like, it's so fun that we can sit here in Austin, Texas, have people from all over the world,
Yeah.
like just hanging out and learning and chatting. And yeah. So throw it into chat, guys. I want to know. Also, final little pitch here. Go to wetalkmoney.com, submit a question for the show. Thanks to White Charts for the sponsorship.
Woohoo.
Go to wetalkmoney.com/community if you want to see our wealth building community and get access to a CFP, an evil hedge fund guy, a couple of crypto losers, and a whole bunch of really other good people.
Czech Republic, India, Miami, Mexico,
Vegas, baby.
UK, Kentucky, Vegas,
Washington.
I've had a
Tennessee,
weird
Alabama.
like desire to go
Russia.
to Vegas.
Yeah,
know
it's been a
why.
while since we've been to Vegas.
I like one.
Well,
of,
we
like,
were planning a Vegas event,
Yeah.
and then COVID
And
got in
that
the way.
Third COVID
I
wave.
just love the
Yeah.
food scene and the shows.
Rochester, New York. Hey, we got Steve down in the Cayman Islands who helped us put on our Cayman Island
Oh
event.
yeah,
Appreciate that. Washington State, Canada, Ontario, Philippines.
Wow,
Sweet.
Portugal. We were trying to go there.
Yeah, I've been trying
Yep.
to get the Lisbon and Porto and maybe the what is it the it starts with an A, the region in the south with all the nice beaches. I forget. I can't say it. I'll butcher the name.
I definitely want to do
Lithuania.
wine country in Portugal.
Yeah.
Eventually.
Get some of the Porto.
Yeah,
South
South
Carolina.
Carolina.
South Carolina.
Sweet.
Oh man, I was in Charleston 2 years ago. That was a great place.
UK. Man, this is great. Well, look, guys, thanks for hanging out with us today. Maybe-
Texas in the house.
Yeah. Ooh, Nigeria,
Wow.
Columbus. Sweet.
San Antonio.
Anything else
Columbus?
you guys want to say before we wrap it up?
Thanks for sticking with us, and we'll be back.
That's
Yeah.
right.
We'll be back. Be patient, but we'll
Algarve.
be back.
Cool. Maybe I should release this book or maybe do another one. I don't know. Let me know if you guys want me to update this book.
You'll need some updates. That's for sure.
Oh, for sure.
Yeah.
I'm like talking about altcoins, and it's like, I don't know, is it Litecoin and Ethereum or like some of the only ones in here? I
Yeah,
think?
there were like 4 light altcoins back then.
Yeah.
Now there's like 400.
Oh man, the
4,000
book. Yeah,
of
the
them.
book would probably be like 4 times as thick at this point, but yeah, that'd be
Yes.
fun.
Oh, we got a couple people in here from Bali.
Crypto jungles in Bali.
I'm just waiting for Indonesia to tell me I can come back to Bali, and I'm
Yeah,
there.
we need to figure it out.
Yes, the Algarve region. That's the region I was thinking
Algarve.
of, southern Portugal. I really want to
Yes.
get there.
Algarve.
Yeah.
I can't. I'm so American. I'm so American. It's ridiculous.
Oh man,
All right. Thanks,
Carnevale.
everybody.
All right, guys, take care. We'll see you next time.